Good morning. Welcome to this Joint Overview and Scrutiny Committee. I'm Councillor Caston and I'll be chairing this meeting today. I'll go through some domestic arrangements. Please ensure your mobile phones are on silent and your laptops. The Council, members of the public and press may record, film, photograph or broadcast this meeting when the public and the press are not lawfully excluded. If you are intending to film, please inform the committee clerk. If you hear a fire alarm, please leave the building immediately via the fire exit and make your way to the assembly point on Ipswich Town football pitch. Follow the signs to the fire exits. Don't enter the atrium, the ground floor areas and walkways. If you're in the atrium at the time of the alarm, follow the signs to the nearest exit. Please use the stairs, not the lifts, and do not re-enter the building until it's safe to do so. So we'll go into the first item, which is apologies for absence.
Thank you, Chair. We have apologies from Councillors Carter, Jameson, Piper and Riley. And we have Councillor Baker, Councillor Dowling and Councillor Patchett substituting this morning.
Thank you very much. And we wish Councillor Riley well after his accident, and we hope to see him back here. It's a shame because as a member of Suffolk Holdings Limited, he's a really useful person to have in these meetings, but we wish him all the best and a quick recovery. So now item 2 is to receive declarations of pecuniary, other registrable or non-registrable interest by members. That's the items on this agenda. I think there are none. No. So the next one is JOS 2345 to confirm the minutes of the joint meeting held on the 22nd of April 2024. Members, we've got those minutes came in the table papers. So are there any points of accuracy that need to be brought to our attention? No. Could I have a proposer for those minutes? Councillor McLaren, and a seconder, Councillor Smith. Thank you. And we'll do a hands up vote for this, shall we? Or yeah, we'll raise hands. Okay, can you raise your hands if you're for those minutes? Ooh, that's me as well. So yeah. So that's carried. Thank you. The next minutes, this is just for Babergh. It's JOS 2346 to confirm the minutes of the Babergh meeting held on the 22nd of April. So are there any points regarding these minutes, the accuracy? No. Could I have a proposer for those minutes? Councillor Smith and a seconder, Councillor Grandon. Thank you. And we'll do a hands up vote for that as well, please. And that's carried. Thank you. Because there's less people involved, isn't there? So item 5 is to receive notifications of petitions in accordance with the council petition scheme.
None received, Chair.
Questions from the public, by the public?
None received.
Okay, thank you very much. So now we'll go on to the first item of business, which is JOS 2347, the Suffolk Performance Report 23-24, and the Business Plan 24-25. So to start this off, I'd like to just take you, we've got our officers and members of JLL here today. So if I could ask you to go round, introduce yourself. Oh, and Councillor Ward, who's you're a member of the board for Suffolk.
Yes, and I'll just provide a quick introduction to this when you're ready.
Okay, would you like to do yours now, and then we'll move right across there, please.
Right. Okay. Yes. Thank you, Chair. Councillor Winch is not able to be with us today, so I'm introducing this report on behalf of him.
Oh, sorry, are you introducing the report? I just wanted to introduce the witnesses we have, and then I'll come back to you, and you can introduce the report. Sorry, but I don't think you need an introduction, Councillor Ward, because I think everybody here knows you. And so we'll start off with Patrick Dixon, please, and then we'll just move right.
Thank you. Patrick Dixon from Jones Lang LaSalle. We act as property fund managers for Suffolk.
Thank you very much. Mark Sargentson.
Thank you, Chair. Good morning. I'm Mark Sargentson, Chartered Surveyor by profession and Non-Executive Director of Suffolk Capital.
Thank you. Patrick Dixon. Is that? Oh, sorry. Sorry, I've written it down twice, so sorry. Henry Kirk. Sorry, Henry. I wrote down the same name twice, sorry.
Background of investment banking and real estate finance.
Thank you very much. Chris Hayworth.
Yes, I'm Chris Howarth. I'm the chair of the board of Suffolk. I'm also a chartered surveyor, as with Mark. Thank you.
And what I might do is I might ask Emily and Holly to introduce themselves, because we do have a new member. Councillor Baker's new to the council, so it will probably be helpful. Thank you.
Thank you. So I'm Emily Atack. I'm the Managing Director of Suffolk and also the Director for Property Development and Regeneration for Babergh and Mid Suffolk District Councils.
I'm Holly Brett. I'm Head of Development and the Council's Companies.
Thank you very much. And now I'll ask Councillor Ward to introduce his this paper, please.
Thank you, Chair. Yes, as I mentioned earlier, Councillor Winch unfortunately can't be with us today, so on behalf of Councillor Winch and myself, I'd like to introduce this report, the Suffolk Capital Limited Business Trading and Performance Report, including the draft business plan for 2024 to 25. I don't want to steal anyone else's thunder. I know you've got presentations coming, but I just wanted to say a quick few words. As you'll be aware, the business plan has been prepared by the Suffolk board in consultation with its fund managers, Jones Lang LaSalle, and it is key to ensuring that Suffolk is managed for the benefit of its shareholders, which are the council's holding companies, and continues to deliver dividends to the shareholders. Suffolk's performance against its business plan is monitored quarterly by the holding companies. Following early approval by the holding companies, the business plan has now been presented to this committee for consideration and amendment prior to going to both full councils for final consideration and approval. Just a quick few words on performance. A summary of the portfolio is presented in paragraph 4.2 of your report, and contracted rents continue to increase, and Suffolk continues to deliver income to the councils, but there has been a further slight fall of 2.58% in the portfolio value in the past year. However, it has performed significantly better than the market benchmark, which has fallen by 16.8%. The portfolio is outperforming industry benchmarks in terms of rent collection, equivalent yield, and void levels. The forecasts continue to show revenue on the portfolio remaining stable throughout 2024 to 25. And you'll see from the table in paragraph 5.1 that in 2023 to 24, Suffolk continued to meet, indeed exceed, its KPIs. And these KPIs will be retained for 2024 to 25. Just a few words on the income to the councils and the Suffolk accounts. Section 8 of the report shows the financial performance as it relates to the income to the councils. The table in 8.1 shows the income and loan repayment to date, and the table in 8.2 shows the financing costs for 2023 to 24. Now, although the debt costs have increased, income from Suffolk still exceeds the debt cost for each council, albeit much reduced. There is light at the end of the tunnel, and we do expect interest rates to start to decline at some point this year. The Suffolk management accounts for 2023 to 24 show a gross forecast income of £5.8 million and company costs, excluding the portfolio revaluation, of £5.7 million, delivering a small operational profit before tax. Once the reduction in value of the Suffolk portfolio at the end of March 24 is taken into account, it is anticipated that the accounts will show an overall loss. And this loss would only be realised if the properties are sold. As far as Suffolk is, so in summary, as far as Suffolk is concerned, performance has been good despite challenging market conditions. The portfolio value remains a concern, but there is no reason not to expect an improvement in the long term. Declining interest rates in the next year or so will improve the council's income. And lastly, there is possibly some more good news. We are getting indications that the proposed ECL changes are likely to be less impactful, which means we may not have to make an MRP provision for the loan to Suffolk, and so we are waiting to hear more on this. Thank you, Chair.
Thank you very much, Councillor Ward. We do actually have Neville Pritchard on Teams that I've forgotten. So I wonder if we could bring him up just to say hello and a little bit about yourself, Mr. Pritchard, or your position.
Yes, hello. I'm a director of investment at JLL. I've been working in national investment for the last 37 years, and I was involved at the outset of setting up Pacifico, so have been involved all the way through. And sorry I can't be with you today, apologies, but hopefully the electronic version will suffice.
Thank you very much, and yeah, sorry again for forgetting you when I went through everyone. So now, Emily Atack, are you going to present, please?
Yes, we've got a presentation to share with you all
Thank
today. It is a sort of quadruple act, so there will be various of us contributing to the presentation, and Chris will start us off.
Thank you, Emily. I don't want to repeat what Councillor Ward said, but I mean, this has been a year that's been slightly more stable than the year before, in spite of the continuing war in Ukraine and the awful problems in the Middle East. We are seeing the effects of the pandemic slightly reduced now, though that's still had a continuing effect with uncertainty about occupation in the office area particularly. So there's been a further slight fall in values in the portfolio. But I mean, the important thing about this portfolio is that it is to produce income for our shareholders, and that continues to be strong. And as you'll see that the contracted rent now exceeds 5.7 million, and the estimated full rental value is 6.75. So there's a good, strong figures. During the year, we were able to complete the acquisition of the portfolio with one final asset, which has taken some time to bring on board, a small retail asset, which we think will perform well. But we've also focused really on improving the sustainability of the portfolio, and that is, as we'll see later, we're working through that. There's a certain limit as to what one can do, because obviously a lot of these properties are under control of the tenants as occupiers, but where we can, we're either investing with them or encouraging them to move things forward, or looking at improving the sustainability when we have properties which come back to us. We're obviously keen to continue that investment, and one of the things that we'll be doing over this year is looking to see how sustainably that can be financed, and that's something we'll come back to our shareholders to agree. I think the final thing I want to say is that as far as this committee is concerned, and as far as my role, if you like, as chair is concerned, sort of overseeing Suffolk, is it's made an awful lot easier by the quality of the team which we have put together really to bring this portfolio forward. And that's not only the board and my fellow board members, which I have here today, the executive team led by Emily with Holly and everything, you know, very, very strong, close focus on the portfolio. But then also is the external team of consultants, which really is led by Jones Lang with an international reputation, have been involved from the beginning of this portfolio. And I think that this committee can take comfort in the strength of the team that we have in taking this portfolio forward.
So this slide is around the key themes for the market in 2024, and Neville is going to present this slide, so hopefully he can join us virtually.
Yes, hello. Well, it's a slight disadvantage here on the basis that I can't see the slide screen, but I'll just talk you through. It's essentially the good news is that the market sentiment is improving. We've had a drop in inflation. It looks as though we're going to get lower interest rates going forwards, and no change recently, but we're certainly heading in that direction. Now, that's good news because clearly as the cost of money gets a little bit cheaper, then we are going to see investors being a little bit more confident about investing. We did have quite a slow year last year. The turnover in the investment market was about 40% down on what we would term a normal year, at about 31 billion as opposed to about 55. And so there's still limited deal evidence taking place, but certainly investor interest and pricing in the market, which we're seeing at the moment, is up. And as the higher income yields compared to the hopefully lower interest costs going forward combine, we should see property looking a much more attractive asset going forwards. We're seeing also that new development is becoming slightly more viable. We've had very high construction costs of late. They're now easing and arguably have plateaued in some materials. Improving values and easing costs do also mean that there is some new development becoming much more viable, and so our market is picking up there as well. Certainly in terms of the market participants, we're seeing a particular interest from private equity, but not only private equity in the particularly a lot of American funds, but also the traditional UK institutional investors are starting to get in busier, and also a lot of local property companies are also taking advantage of what appear to be quite attractive prices at the moment, and an ability to invest into that market. So more people taking part. The occupational market's proving quite resilient as well, especially in the industrial logistics markets. Even the retail market is showing signs of recovery, with increased interest from especially the value retailers in taking improved occupancy. And the office market is slightly bipolar at the moment. Older buildings still very difficult, but there is a good demand for top quality office space. So, we can't write off the sector. It is something where if you have good quality buildings, there is occupational demand. Looking forward, then there's a lot of hiatus going on, and as Chris mentioned, we've got all sorts of things going on in the world. We've got an election coming end of the year, so I don't think we can sit on our laurels, but certainly as things stand at the moment, the market is looking as though it's moving in a positive direction, and pricing is starting to evidence that as well. Thank you.
Thanks very much, Neville. Just look now at a sort of an update of the portfolio. As I said, the investment is now completed, and we've focused particularly on generating income for the long term. And also there's a part of the portfolio in 26 where there are some breaks and lease renewals coming up, so we've been working hard to mitigate those, take the risk out by extending leases, discussing with tenants how we go forward. As I said earlier, the value of the portfolio has decreased slightly on a like-for-like basis. I think perhaps with interest rates likely to fall, then we see that this year there may then be some increase in value, we hope. But the total net income received by the councils since the portfolio started is just over 12 million. We're working hard, as I said earlier, on the ESG improvement path. 50% of properties now have an EPC rating of C or above, which is good, but we're looking to continue to improve that, and we do have our first A+ property in the portfolio in the Co-op supermarket we've just bought. We reduced our debt repayments to the council over between 22 and 24, and that will be made up over the next 10 years. But we're proposing full repayments for 24-25. And if you look at the portfolio, it's obviously it is a good diverse portfolio of assets. Rent arrears have consistently been low, well below 5%, and that's certainly below market figures. As I mentioned earlier, we're looking to continually to manage the risk by reducing the weighted average unexpired lease term, actively managing leases and breaks as they go forward. And the voids in the portfolio, the empty space we've had there, have been around 3.4%. And that, you know, that one obviously gets a churn of tenants in portfolios like this. In many cases, that can be very useful, because if there's rental growth to be brought about, then that gives one the opportunity of bringing in new tenants at higher rents, and that's good news for the income from the portfolio. But as you can see there, the 3.4%, the market benchmark is about 8.3%, so we're well ahead of that. Next slide, thank you. And here you'll see, I won't go through all of this in detail, you'll see a summary of the portfolio since 2020. You can see the values of the assets have increased up to a high in 2022, 94 million. It then decreased again with what happened in the market outside. There are obviously quite a lot of factors that we as a board and a management team can't affect. What we can do, of course, is we can work to improve rents, we can work to lengthen leases and matters like that, which help to protect the value. But there are, you know, when there are changes in yields caused by external changes in the financial markets, there's little we can do against that. You see, the second line shows you the level of contracted rent. Again, that's continuing to grow. And then the estimated rental value below that, again, is continuing to grow as well, which is really good news for the portfolio, very good news for the income which we can deliver for our shareholders. And then it's perhaps just also worth looking at the WALT, weighted average unexpired lease term. We're coming up to our time in 27, where there are some leases coming to an end. And as I said earlier, we're looking to mitigate those as and when we can by negotiations with tenants. Next slide, thank you. You can see here a summary of the portfolio evaluation. There have been some reasonably strong increases, particularly in industrial assets, and there have also been some falls, particularly in office assets. As I mentioned earlier, there's still some uncertainty over office occupancy, and so we're looking at these to see how we can mitigate those, how we think about taking things forward. And then if you look at the 5-year cash flow forecast, you can see, I was talking about the period in 26-27 when there are leases coming to an end. Now these figures assume that all the leases which come to an end or have breaks do so at that time. Obviously we are working a way to, so I suppose in a way you could look at this as a worst case scenario. We are working hard to take out some of those breaks or agree with tenants how they go forward. Some tenants may decide they don't want to go anyway. Some will go, but this is something we're working on. But looking in the long term, you can see 28, 29, the income going up to well over 6.5 million. So the future is looking very strong.
So just on Sifco's key performance indicators, as we've already heard, it has outperformed the KPIs set. So increasing contracted rent has been 4.1% over the year, and the target being 1%. The equivalent yield is above the MSCI benchmark. The EPC of the portfolio has risen from 41% in 2021 now to 50%, and as Chris has mentioned, we're continuing to look to improve those at key intervention points, and the rent collection stats continue to be strong above the 95% target, as you can see on the slides.
If we pass you on to Neville again, he'll take you through the next two slides that look at the components of total return and compare the Sifco portfolio to the MSCI benchmark.
Yes, I think the first thing to say is that clearly commercial property is a long-term investment. If you look at the graph, you can see that over many years, the overall trend is for positive income growth and also capital growth. Clearly, we've had a difficult few years of late with COVID, and then recovery in 2021 when values picked up again. And then we had to contend with the bond markets and 14 interest rate increases with the short-lived trust government. As far as the property interests you hold are concerned, then the thing we need to remember is that the income is contractual. The tenants are contracted to pay you that income, and that means it's very resilient going forwards. And given a well-selected portfolio and where you can keep void rates low, and that reliable income stream will keep coming through in difficult economic circumstances as well as the good times. So fundamentally, if you look at the split between the income return and the capital return there, then clearly some years the capital has gone down of late, but it's come back up in 2021. It is now looking positive again. The market is improving, as I said earlier, but the fundamental is that as an income generative portfolio, which is what we're trying to achieve, then the income stream is very resilient. Moving on to the next slide, this demonstrates the reliability of the income stream as well, but shows that we've managed to not only maintain the income stream, but going from 5.1% income return at the outset, then in 2024, against value, we've improved that up to 6.8%. So not only a resilient return, but actually an improving return going forwards. And if we contrast the Suffolk portfolio relative to the benchmark, which is run by a company called MSCI of all property, then there's various figures there. But I think if we're taking a long-term trend, then over a 5-year basis, our income return has been 6% compared to 4.5% in the benchmark. So obviously, the income return has been looking very good for Suffolk in contrast to the property markets generally. And our total returns, so that includes capital values, has been at 2.3% against the benchmark 0.7% despite difficult years. Looking forwards, then on the bottom right table, then that shows sentiment and figures which are coming through as of the first quarter of this year. All of which are positive, so not only positive income return, but also capital value growth as well coming forward. So we've had a slightly rocky road over the last couple of years, but things are starting to pick up, and the long-term view is that with reduced interest rates and an improving income, then this performance should look very positive going forward over the next few years. Thank you.
Thank you. So in terms of the business plan for 24-25, the key strategic objectives are to reduce and mitigate the future portfolio void, continue on our ESG path, manage the portfolio risk, to use capital in a strategic way and ensure that that helps to protect and enhance the value of the assets, and also to increase income, and to focus on the longer term funding requirements from 2025 and beyond. These objectives haven't changed significantly in the past few years. They are very strong kind of core objectives for the Suffolk portfolio. In terms of our management objectives, again, they're the sort of usual objectives that we have. So it is about maintaining good budgetary and credit control. It's about making sure that we are implementing those individual asset initiatives to deliver value and income, and very carefully monitoring markets to see what opportunities are there for us in terms of enhancing value and income, and also looking at asset liquidity as well. And we continue to work with our tenants in a partnership way which benefits the portfolio and the businesses that occupy our premises. And particularly around improving the sustainability of those properties as well. So as we've mentioned, managing the void level across the portfolio is very important. We are significantly exceeding the benchmark with a current void of around 3.4% as at the end of last year, or last financial year. So we have half a dozen properties that are void currently, 2 of which are currently under offer. So we've got Unit 15 and Unit 19 and 20 under offer. So that percentage figure will come down significantly once those units have been let. We also look ahead to see what our future void could be, and that includes premises where we've got breaks or lease expiries coming up over the period. That would create a future void of just below 6%, but that assumes that the other properties haven't been re-let, so it's unlikely that we'll achieve or hit that level. As we've mentioned, we do have some larger properties with lease expiries and break dates coming up in 25 and 26. And they would have a significant impact on income and capital if these properties are vacated. We are working closely with these tenants to understand their future plans for these properties, and also looking at what other options might be available to the board should the tenants vacate the properties. So this is a key focus for the business plan in 25-26. The board of Suffolk is committed to improving the sustainability of the portfolio, and we have been working on this for a couple of years now. So we have now achieved a position where we no longer have any F or G rated properties within the portfolio, and that was completed in April 23. We're on target to meet our minimum C rating by 2027, and how we do that really is considering what improvements can be made at every intervention point that we have. So that's things like when properties become void, we can have a look at whether improvements can be undertaken at that point. But it can also be when tenants approach us and say they would like to have consent to undertake works to the property, we can advise them about whether there are some alternative works that might be more sustainable, or even suggest some additional works that they might want to consider for sustainability reasons. When we are undertaking refurbishments, we're always targeting EPC or better, and in some situations we are, where it's financially sensible, we are actually targeting a B rather than a C rating. We're also looking to remove gas supplies wherever possible, and replacing with electric alternatives. So this slide shows the progress of our portfolio in terms of the breakdown of the properties that we have in the different EPC ratings. So we still have a bulk of properties in the D and E ratings that we are working towards moving up to be C or above. And that is on a basis of when EPCs are due to expire, but also working with tenants on an opportunistic basis as well. So as Chris mentioned, we now have our first A+ rating, which is the acquisition of the co-op property in Stanton. These are just a few of the sort of notable changes that we've had in the portfolio. The Screwfix property in Ipswich has moved from a B39 to an A24. That was following works that the tenant undertook themselves to improve the sustainability of their premises, so there was no additional investment required from Suffolk. Lutia House, again, we resurveyed that property relatively recently, and that had actually moved from a C60 to a B41. That's quite significant because it is quite a large property, so to have that improvement made by the tenant, in effect, is a real benefit. And then the final one is the gym in Lincoln that Suffolk owns, where that was an example where they came to us wanting to undertake some refurbishment works. We had a conversation with them around what works they should be, and an agreement was made where the landlord, Suffolk, would make a contribution towards works, to help to improve their EPC rating, but also we were able to negotiate the removal of a break option, which meant that Suffolk benefited from a longer secure lease term as well. So there's quite a lot of different ways that we're starting to see those improvements coming through in the portfolio. This slide shows the journey really from when we started to measure and make this commitment in 21 through to the current year. You will notice that the total number of properties does fluctuate. So we've got 86 in 2021 and 90 in 23-24. That's down to how properties are assessed. So with some of our larger properties, they had originally had one assessment for the whole property, but we have actually broken some of those down so that the EPCs have been undertaken on each floor. So that's why there is a little bit of a fluctuation in numbers, and you'll see that as we continue to work. It's more effective to have a floor-by-floor assessment than a building as a whole, particularly where you've got multi-let offices. But you can see we're on track in terms of our 50% position. So I've talked about some of the things that we have, or some of the approaches that we've taken in terms of sustainability, and this slide just shows some of those more detailed initiatives as well that are being considered. So things from smart meters to green walls, electric charging points, making sure we're using solar panels, but also looking at biodiversity as well. So for things like Kestrel Park and Braintree, looking at whether there are bird boxes or wildflowers that can be added to the estate as well. So there's quite a wide range of measures that we are considering and looking at, and a lot of it I think is also about making sure we're collecting the data so that we can see where improvements are being made and where we can make improvements, and working with tenants around that and ensuring that the leases that we've got in place allow us to collect that data as well. So if we move on to portfolio risk, checking to see whether it's me next. This one it is. So the management of risk within the Suffolk portfolio it has always been very key, and we've done that in a number of different ways, but primarily it's been about making sure we've got a balanced portfolio that is diversified across sectors, locations and tenants. So it's about ensuring that we don't have, I suppose, all of our eggs in one basket. We don't want to be invested all in offices with one tenant who's paying the rent. So it's about balancing that risk across a number of tenants, a number of sectors and locations, so that if anything in the marketplace affects any particular sector or a particular tenant, we have some broader protection. We also make sure that the portfolio is managed in a very professional way, and so we have our expert fund managers in JLL, our managing agents workmen who work particularly hard in terms of ensuring that our tenants are paying rent and observing the terms of their lease, and we also have legal and financial advisors as part of that team as well. From the beginning of Suffolk, we recognise the importance of having non-exec directors as part of the board, and we have 3 non-exec directors who are here with us today, as well as having councillor directors and an officer director, myself, to make sure that we're looking at the management of the Suffolk portfolio from as many different perspectives as we can to ensure that it continues to deliver income to the councils. In terms of how we monitor or manage risk, my view is we do that on a daily basis, but we need to have a mechanism for ensuring that risks are known by the board and by key stakeholders. So we have a quarterly review of our risk registers with the board, and we also do that with the chairs of the holdco and also the shareholders risk lead, so that there is clear oversight of the risks that are being managed throughout the board, the holding companies and the council shareholders.
just following on from Emily, so this slide shows the different bands of capital value for each of the 22 properties and the income spread. So this is a risk mitigation factor, showing that I suppose the main thing to note is the 10,000 to 50,000 bracket on the income. That shows that a great deal of the tenants across the portfolio are in that bracket, meaning that Sifco is not a great exposure to a tenant failure. And this is in line with the investment guidelines set at inception, that no one tenant surpasses the 10% limit of contracted rent on the portfolio, which is the case and continues to mitigate the risk. Sector splits, as you can see, we're broadly in line on the office sector, retail slightly under the MSCI benchmark, and overweight in the industrial sector. That is by design, given that the industrial sector has been the best performing sector in recent years, and rental growth in that sector, as Neville mentioned earlier, has been accretive to the fund's performance, so that is by design. And then in terms of covenant risk, this is for each tenant across the portfolio. This shows the relative covenant strength of each tenant, with 75% in the relative strong category and just 5% considered to be in the weaker category. Again, this is another positive sign for Sifco, meaning that it maintains its risk mitigation strategy, and this is based on a credit safe and sort of JLL in-house view of these tenants across the portfolio.
So if we move on to capital expenditure, the budget for capital expenditure for the current financial year for 24-25 is just under £300,000, and that is to undertake refurbishments of properties that are due to become vacant, and any EPC improvements that might be part of that. There's also a little bit of feasibility work in terms of potential alternative uses for some of the properties that may become vacant in 2026. The capital expenditure for 24-25 will be funded through Sifco cash flow income and from dilapidation receipts when tenants have vacated. Could be beyond this financial year, and looking at it in terms of the kind of best and worst case scenario. So you can see here that obviously best case scenario is there is no expenditure required, through to approximately £3.5 million from a worst case scenario. I think it's probably fair to say that our view is it's more likely to be in the mid bracket rather than best or worse, but we'll continue to work with our tenants around the options in that regard. And that does mean that Sifco needs to consider how it's going to fund those capital works from 2025 and beyond. And the options really are building a sinking fund, which is to collect a percentage of the rent roll and effectively save it for when you need to spend that. It's looking at recycling capital, so selling assets and realising some of the profit from some of those assets to help support the expenditure on other assets. We could look at refinancing, and we could look at the injection of new capital. If I move on, the capital strategy for Sifco over the short, medium, long term is really that in the short term, so this current year, we'll use the working capital that we have within Sifco, the dilapidation settlements and the additional cash flow that we have. In the medium term, so from the end of this year through to, say, 2029, we may need to look at realising capital from asset sales within the portfolio. And that will be looking at assets where there is surplus value, or where a sale would negate the need to undertake capital work. So there is some merit in that approach. And then over the longer term, we'd like to transition into creating a sinking fund so that the surplus income that's collected above the amount of debt that is being repaid to the council and the running costs can be held back for capital works and investment in the portfolio. And looking at our cash flow projections, we think that that's something that could occur from 2029 onwards. At this stage, we're yet to receive the Suffolk end-of-year accounts, and so we are still working on draft figures and management accounts at the current time. So the gross income for 23-24 was 5.8 million, and the company's costs were 5.7 million. So the company delivers a very small operational profit before tax, but we are anticipating a loss overall, which will reflect the reduction in value of the Suffolk portfolio as at the end of March 24. And as John mentioned earlier, the loss would only be realised if those assets were sold. So coming up to the last few slides now, and all of these slides are within the business plan, so hopefully you've had a chance to look at these. So this slide shows the Babergh income. So you can see the top line, the interest received, as the gross figure. That line has increased since 2017 through to 2023, with the reduction in debt that has been repaid showed in the accrued interest and accrued interest receivable line below. But you can see the general direction has been positive. You can also see that the cost of debt to the council has increased, which has reduced the net interest to the council, albeit in 23-24 it still delivered £641,000 of net interest to Babergh, and an additional £35,000 for staff recharges. You can also see in the bottom half of the table the capital movement as well. So you can see that around about £1 million worth of capital has now been repaid to Babergh from Suffolk. And then the Mid-Suffolk slide is very similar. The difference between Babergh and Mid-Suffolk is their different treasury management borrowing strategies. So the cost of debt varies, but the gross income is exactly the same, and the recharges are the same. It's just that their costs of debt are different. And again, you can see the capital movement, which is exactly the same. So around about £1 million repaid from Suffolk over the period of the loan. So then just a final slide from us really in terms of wrapping up. So the business plan does provide a really important part of Suffolk's governance. It's a framework for how the portfolio is managed throughout the year and looking forward. The KPIs, again, are an important part of that framework, being able to hold us to account in terms of our performance and whether the portfolio is delivering against its promises effectively. As we've said, the portfolio is balanced, and that does diversify risk across the sectors, locations and tenants. And this has proved to be a successful strategy from the pandemic through to wars in Ukraine and the impact that has had on cost of debt. So that continues to be an important strategy for us in terms of managing risk. For the longer term, the key focus for Suffolk has got to be how it can financially sustain investment in the portfolio and the capital works that are needed over the longer term, and that is going to be the key focus of our work over this coming financial year and the next financial year, whilst we look to invest in the portfolio and ensure that there is sufficient income and capital to do so. So thank you very much. Happy to take questions.
Thank you very much. And so, committee, this is looking to go to full council in June in both the councils. So what we're here to do is we're here to make sure this report's ready to go to council. We want to look at the information and the performance indicators, make sure that we're happy that they are showing us what the portfolio is doing and what's happening in this portfolio, the strategic indicators and objectives. But one of the really important things that we're doing here is to see if in our eyes this portfolio is well managed and robust enough to our liking. So I just did want to start off with a question. There's a lot of redacted information in here. Could you just assure the committee that the sum of all that is shown in other places in the paper, and maybe talk about why that's so sensitive, that information? Thank you.
Yes, certainly. So the committee will have received the unredacted papers. So the slides we've shared today, you have got full copies of within your packs. The slides are, there's no new information on the slides. It is a summary of the slides from the packs that you've received. We have redacted commercially sensitive information. So that's things that relate to individual tenants and particularly things that could have a commercial impact. So where we have talked about dilapidation settlements, for instance, it would be unhelpful to share the details of those settlements publicly, and equally where we've got details around tenants' break dates as well, that can be unhelpful in terms of the management of the portfolio. So any information we've withheld has really been for commercial sensitivity reasons, not for any other reasons, and the committee will have full sight of those, as will full council as well. We do like to try and keep as much discussion as possible in open session, so that we can be transparent for our residents. But if you do have any questions on any of the specific commercial matters, happy to take those outside.
Thank you very much. And the end of year accounts, will they be ready for June, for the council meeting in June?
So Suffolk is required to publish their end of year accounts by the end of the calendar year in December. We have brought the business plan forward compared to previous years, so we're probably about a month earlier than we would normally be taking this business plan forward, which does impact on the timetable for the delivery of accounts. We're hoping to have draft accounts by the end of May. Whether they'll be ready to be in public form for the full councils, we don't know yet, because that does depend on our auditors as to whether they're prepared for them to be released or not. But we'll certainly try to work towards that and update any figures if we're able to as well.
Yeah, thank you. So you hope to. Thanks. Right, so I'll go to questions now. Councillor Grandon.
Thank you, Chair. I have two questions, if I may, please. Look, I'm very pleased to see that it was a very pleasing performance from Suffolk, particularly compared with some other councils. But I have a question about the purchase of the co-op. I had thought, clearly wrongly, that the portfolio had been complete. So I was quite surprised to see that there was another purchase, but even more surprised to see that it was in the retail sector, which is quite a vulnerable sector, as we all know at the moment. My first question is, please can you tell me, or tell us, the thinking behind purchasing a retail building when retail is a difficult area at the moment? Thank you.
Thank you. So I'll start this question, but then I might bring Neville in respect to the retail sector, and particularly the smaller convenience stores. So Suffolk committed to buying the co-op convenience store in Stanton a couple of years ago. Because it was a development, it has taken some time for the purchase to actually complete, which is why it completed in this year. The delays really were because of all of the challenges that have been in the construction sector. In terms of the reason why the board decided to invest in the convenience store, it is quite a liquid asset. This sector of the retail market has been performing well, and we'll bring Neville in to tell you a bit more about that. But it did actually provide or fill a gap in the Suffolk portfolio that we didn't currently have filled, and it provided a good opportunity in return on investment. But I'll perhaps bring Neville in to just give a bit more background in terms of the performance of these kind of convenience stores within the investment market.
Yes, just to say that, as Emily says, this took a little while to come through. The development didn't proceed quite as fast as we'd initially anticipated, but got completed in the end, which was marvellous. The retail in general in the high street obviously is still a challenging place for some locations. The difference about this is it's effectively a bond-style income. We've got a 15-year lease to Co-op, and that lease is actually geared to inflation as well, so the rent goes up in line with inflation, so it's very secure as an income stream going forwards, and obviously the Co-op is a strong covenant, so we were happy with that. And what we found is that food has obviously been a very resilient sector over the course of the last few years, even through COVID and everything else, and the investment market at the moment is particularly keen on food stores and also keen on retail warehousing. The industrial warehouse sector has led the market, but there is increasing interest in that food store and in the retail warehouse markets, which is coming forward. There's a limited availability of such properties, and most of them are let to strong tenants with relatively long leases. So it's an attractive situation. It's also local to you, and has that benefit of being a new modern store where there'll be no capital expenditure required for many, many years, with a 15-year lease, which is completely down to the Co-op to repair, insure, everything else like that. So all you need to do is take an income stream for the next 15 years, which is entirely offset against inflation.
Thank you. May I ask my second question?
Yes, please do, Councillor Grandin.
Thank you. Thank you for that. On page 57 of the report, titled Portfolio Void Managing Existing Vacancy, I don't know if you'll be able to answer this, but on the second column, Future Known Void, one of the breaks or expiry dates is next week. So obviously, when the report was written, that was some time to go, but now it's imminent. Are you now able to tell us the position of that potential void, please?
Thank you. So where we have future voids coming up, we do start to market those properties ahead of the void date. So the property that you're mentioning, we are marketing, and we do have interest from another party to take that property on.
So hopefully that should move into a positive position then.
Yes, and I think, as Chris said, we don't see all voids as a negative. We do see some voids as actually being quite positive. So particularly on that estate, we haven't had any voids since we've purchased the property. It's a really well let scheme, and actually we see this to be an opportunity to probably see some rental growth come through, which in turn will help with rent reviews and lease renewals. So that's actually quite a sort of positive opportunity for the portfolio, that this property is being vacated next week.
Right. So Will you be updating the report when it comes to full council?
We won't be updating the report when it comes to full council. As you can imagine, nothing stands still with the property portfolio. So most of this data, there's already variations of this data. I think if we were to update the report, we'd probably end up with many different versions of it, which might cause more confusion than benefit. But obviously, the board is kept up to date with all of those stats. And if there was anything that was showing a kind of different direction of travel that really influenced or changed the report, then we would need to share that. But we're not proposing to change all of the stats between now and the report coming through to June. We just have to accept that this is a snapshot in time, effectively, and so things will continue to change as we move forward.
Thank you very much.
Thank you. Councillor Scarf.
Thank you, Chair. I think one of your most stretched KPI targets is the minimum of C by 2025 and eventually 2027. A third of our properties are currently in D, so that's quite a challenge, I think. How do you think you're going to meet that challenge? I know you've said that you're confident that you will, but it seems to me that that's one of the biggest challenges that you actually have. Is it possible, even if not today, that for full council we might have a little bit more information about how you might meet that challenge? I know you've talked about the opportunities that arise when a lease expires, etc. But I think, from my point of view, I would like a bit more confidence about that KPI measure. Is that possible?
We can have a look at what further information we can provide. But in effect, what we are doing is undertaking new EPC assessments for those properties. And what we are finding, actually, when we've undertaken those surveys, because bear in mind those surveys last for 10 years, they can often be really quite outdated. So often, once we've gone back and done those EPC surveys, we can see some movement already without actually having undertaken any works, because the tenants may have done things already, like replace light bulbs with more energy efficient light bulbs. So that's the first stage in terms of the works. We need to know what we're dealing with, what we're assessing. So we are going through those surveys currently, so that we've got up-to-date data. Obviously, we're needing to do that in an incremental way. We can't, do 90 surveys all next week. So we don't have a full picture of the portfolio at this stage in time, because we need those surveys to come through. And then with those surveys, you then get a recommendation in terms of the works that could be undertaken to help to improve the rating. So we will review those recommendations and work with the tenant, if we've got a tenant in place, to see whether we can deliver against those, or if we've got a vacant property, the board will have a look at the capital investment that's required, and look at, actually, should we be targeting a B in this instance, because it's actually only a relatively small additional amount of money to achieve a B in this scenario rather than achieving a C. So whilst the minimum C rating is the one that we're targeting currently, we are also stretching and looking forward, because we don't want to be in a situation where, within that 12-month period, we've got to try and move from the whole portfolio from a C to a B. So we are really trying to stretch to achieve the most sustainable rating we can within the most sort of financially sensible envelope. So I'm struggling to know what else we could provide for you at full council in terms of extra data and documents, because we have summarised what we've got within the business plan, but more than happy to have a conversation offline and take you through some of the works that we're involved with.
Thank you.
Well, as a supplementary then, you've got a number of leases that come to expire sort of 26, 27, and without knowing exactly what they are they sort of in the office sector, which is the more difficult sector? Are we sort of maximising our work in terms of the EPC ratings in those sectors where we know that the leases are coming to expiry, that they are, like offices, much more attractive if they're A or B ratings, etc. Perhaps that kind of information might be useful. That was kind of what I was getting at.
Yes, certainly. We can look to add the EPC ratings to the properties that are due to expire, particularly the 3 key office properties. There is some of that information within the report. So, for instance, Lutia House is a B rating, but yes, we can add that as well. I think from memory they're all above a C rating in any event, those larger properties. But yes, you're right, those properties that are A and B are more attractive in the office sector rather than those with lower ratings, and that's certainly one of the opportunities that we're pursuing in terms of the lease expiry of one of those properties, is to see whether we could actually push that building into an A and whether that would make it even more attractive for its existing tenant.
Thank you. Councillor Pearson.
Don't seem to be working. Oh, yes. From that, talking about the ESG improvement path, I also had made a note to ask a question about whether we can have some detailed information about what is needed to get all the properties to level C. I mean, presumably, it's you must have some idea of if it's putting in double glazing, if it's putting solar PVs on, that kind of thing. Is it possible to have some information like that, and the associated cost, obviously?
So we only have that information where we've got up-to-date EPC assessments. So we have where we've undertaken those EPC assessments recently. The initiatives are added into the slides, so they include some of the suggestions, so things like smart meters, EV charge points, some more biodiversity. So those are included more generally in one of the slides, in my slide packet, slide 34, which says ESG and sustainability initiatives. For the properties that we haven't got up-to-date surveys, I can't share that detail with you at this point in time, because obviously we're undertaking a kind of batch of surveys, and what we tend to do is undertake a batch of surveys and bring those back to the board in terms of the recommendations for that batch of properties, and we've shared everything that we've got as part of the business plan, but we could bring more information at once the next batch of surveys have been completed and the next batch of recommendations are available for the board.
Thank you. A follow-on from that is although the deadline, the initial deadline for getting to level EPC-C is 2025, you're obviously working to the 2027 two-year extension period. Do you feel that there will be any impact on rental income for a building that has gone beyond 2025, but in that two-year period, 2025 to 2027, if it hasn't reached level C?
I will bring JLL into this, because obviously they're more actively involved in the market than I am. But I would say from my experience with office properties, we are starting to see some difference in terms of rental values where properties exceed EPC-C. So if they're sort of A's and B's, that kind of prime property, but probably seeing less difference at the sort of lower end of the market. In terms of the 25-27 question, I don't think we will see a significant difference because of those dates, but I think that is where the market is moving more generally, that more efficient buildings will see a slightly better return, and that might be that it's a slightly higher rental value, or it might be that we see shorter void periods because those properties stay let or re-let more quickly. I don't know whether Patrick or Neville want to add anything further to that.
Yeah, sorry, I'll just follow through on that. I think the thing to remember is that the majority of property leases tend to be sort of 5-10 years, and so we're only really finding that there are issues we need to contend with when leases come to an end, and obviously a lot of the leases will continue on through with a contractual income payable over that 25, 26, 27 and onward period. Where we do get expiries coming through, then it's something which we're looking into in a forward way as to what needs to be done, and no properties are the same. So there are some properties that can improve an EPC very swiftly with minimal work and minimal capital expenditure. There are others where the works need to be sort of fundamentally quite substantial, and so each property is a case-by-case point, but certainly I think we will see going forwards that the more efficient buildings are inevitably much more attractive to tenants. It depends very much at the local level as to the supply and demand availability, and fundamentally if you've got a building which is not terribly efficient but in the right place and there's limited other availability, then tenants will still take it. Clearly, where there's an oversupply of situations of available space and you've got a tenant's market, they will opt for the better quality buildings because they'll be cheaper to run, and there will be an offset in rent between the more efficient buildings and the less efficient buildings, which in part is because occupiers want to be in those efficient buildings, and in part is a financial offset against lower running costs, and so they can afford to pay more rent.
Thank you very much. Councillor Patchett.
Thank you, Chair. Thank you to the board for the detailed description as well. So I was just looking at page 30 of the papers, which is sort of talking about, well, I don't know whether you can sort of answer this question at all, because it's sort of, perhaps it's more council business, perhaps Emily might be able to, but looking at the Public Works Loan Board 10-year annuity that kind of runs out in 2028. So obviously that's quite a favourable rate at the 1.71. Do you know, are we looking to sort of refinance that, or in 2028 will we actually have paid it off interest and capital? So just really sort of looking at that loan, do we know what we're planning to do with that loan in 2028? Thank you.
Thank you. I think that's probably a question for the Council's 151 officer in terms of the Council's Treasury Management strategy. I'm happy to take that question away and talk to the 151 officer to see whether they're able to give any insight at this stage in terms of that 2028 proposal. But we are still some 4 years off that, so they may not be able to give more than a kind of indication about what their views are around that loan expiry date.
No, thanks for that, Emily. Because obviously our sort of the money we make from SIFCO is obviously offset against the interest we pay on the loans we sort of took to borrow. Chair, I don't know if I can just ask a different question here. So just reference the sort of targets and the KPIs. Are they reassessed by the board every year? So I guess with us sort of doing our due diligence against sort of scrutinising the targets, if you know in 26, 27 that we've got some voids coming and we're potentially going to have less rental income, do we shift the target that we're not going to make percentage-wise as much? So is that target a kind of a moving beast? Do we change the targets? Do we review the targets every year in KPIs?
So we try to keep consistent KPIs in terms of the themes that we're dealing with, so that the kind of progress of SIFCO can be looked at over a longer term rather than just sort of measuring lots of different things all of the time. But the board, along with our professional advisors, do look at what is happening in the market in terms of what would be appropriate KPIs in relation to the market. You know, if we've got a market where we're seeing capital values are falling and we have a KPI that says ours are going to grow by 5%, it's going to be very difficult for us to achieve that because of the external factors. So we try to find a balance between keeping the KPIs fairly consistent, but also in relation to the market. So equally, if we've got a market where we're seeing a lot of rental growth, we would have a more stretching rental growth target than in a market where it's not as positive. So I suppose the summary is we try and keep the themes constant, but we try to reflect what's happening in the wider world in terms of our KPIs. And that's particularly where we've been using benchmarks in recent years so that we can start to see how the Suffolk fund is performing compared to other commercial property.
I think, I think it's important to say about the KPIs. I mean, we try and set the KPIs so that they are things that we can work on. The whole point about KPIs is to assess the performance of the board and what we're doing, and therefore we need to make sure that they reflect those things that we can affect, and that perhaps some of the other changes going on in the market, that's perhaps not so much reflected in the KPIs. It's a matter of what we're doing to make the portfolio work at its best.
Thank you very much. Councillor Dowling, please.
Sorry, thank you. It's about EPC, but actually it's been mostly covered by what people have said, so I'll step down. Thank you.
Okay, thank you. Councillor Rowe.
Yeah, I've got a question about EPC. It's much like last year, this being a bit of a focus. With the lead-in times for kind of grid connections, is there a way of including anything about how that's coming? Because not within this, but I know with Gateway 14, that's been quite a kind of big bit of why we haven't got solar panels on the buildings. And there's various companies which kind of are involved in how to make it so we're able to kind of be ready for EV chargers and solar panels, and the slightly more expensive and slightly more difficult parts of reaching kind of higher EPC ratings. So yeah, I was wondering kind of where we are with developing what, like, our assets kind of in the not just our buildings, but what infrastructure there is that kind of we'd need there to be, and what discussions we'd need to be having to allow for that.
Thank you. So grid capacity across the UK does vary quite significantly. And I think probably the scale of our properties are quite small. So we haven't found that grid capacity is an issue with the Suffolk portfolio to date. That doesn't mean it couldn't be in the future, but we haven't seen that. I think with somewhere like Gateway 14, it's such a large development, and there is a particular grid capacity issue in that area that, that is really highlighted for us. But actually in other parts of the country, it's perhaps not such a challenge. And also the properties we're talking about are much smaller scale compared to Gateway 14. So we really haven't seen that as being a challenge. We did install solar panels on one of our properties, not last year, but the year before. And whilst there were some challenges working with some of the utilities companies around that, and in terms of getting some of the component parts, grid connection wasn't one of the issues that we had there, and that has proved to be a beneficial investment in the property, and the tenants benefiting from lower cost energy, particularly in recent years as well.
Okay, thank you.
Thank you. Councillor Baker, please.
Thank you. So obviously there's lots of information here, and it's great, loads of financial data. My background is finances. There's a couple of things in relation to the redacted information that I'd like to just sort of ask if it would be possible. So would it be possible to anonymise the locations and perhaps code the locations? Because actually seeing the financial information is really very important to get a good grasp. So instead of sort of saying the building, obviously not the tenant, but actually just putting a code against it, so we actually have no idea, but we know it's a property and we know it's got this amount of information. I also wonder if it would be possible to have more comparative data, or even detailed finances available per property, because it's very difficult to sort of follow the information through per property or as a consolidated position. So it'd be really great to do that, and also see sort of a proper forecast for sort of at least the 3 years per property or as a consolidated point, and wondered if it would be possible to even see interim accounts, because obviously there are interim accounts at different periods throughout the year. We know that they're draft. It would be great to sort of have that available. So that would it be possible?
We can have a look at how we can make the information more transparent. We have been on a journey with Suffolk, I think it's fair to say. So probably when we first started Suffolk, the majority of the business plan wasn't published. We did just publish a council paper with some of the key elements. Moving through to probably last year, publishing the whole business plan, but redacting commercially sensitive elements. So we're always happy to talk about other ways of how we can be as transparent as possible. That's our aim as well, whilst at the same time balancing that kind of commercial sensitivity. So absolutely happy to do that. We do also have a website, the Suffolk website, that you might want to have a look at, and we do publish the quarterly information on that website as well, in terms of the portfolio's performance on a quarterly basis. And we do provide a little bit more information on the properties as well. If there is other information, we can provide you offline. More than happy to do so. Whatever you need to see, really.
Thank you.
Thank you. Councillor Smith.
Thank you, Chair. Thanks for the report. One of the KPIs is rent arrears. How confident can you be in your tenant's solvency, and how do you mitigate for rent arrears?
Thank you. So we do monitor the covenant strength of our tenants, and the board receives a report on that on a quarterly basis. So one of the slides that we shared today showed that we have 75% of our tenants who have a strong covenant. So that means we expect them to survive. And we have 5% where there's a weak covenant strength, and 20% where it's average. We do have a very careful way of collecting rents, and certainly where we have seen some tenants who have gone into liquidation or administration, we have probably been one of the landlords who has most recently been paid their rent, because we are so hot in terms of chasing any late payments and looking for patterns in terms of something being a bit unusual. So we've got very close oversight of our tenants. But ultimately, we are dealing with businesses. Businesses experience challenges that aren't always predictable. And that's really why it's so important that we have a large number of tenants, that they're balanced across sector. Because if we do see some tenants fail, it has a more minor impact on the portfolio as a whole than if we were reliant on, say, a handful of very large tenants who were paying us the rent on a monthly and quarterly basis.
And as we said before, I mean, we do, in any portfolio, you welcome a small amount of void, because it does allow us, with assets, to improve the rental tone and everything else. So but obviously what we don't want to see is large amounts of void, and that's what we've been very careful to monitor, exactly as Emily has outlined there.
Thank you very much. I've got Councillor Pearson and Councillor Wyman, but I might come in now because it's Councillor Pearson's going again with a couple of questions from myself. So with the valuation of the portfolio. I hear that it's not just a bricks and mortar or steel and concrete valuation, that other things like the length of tenancy that's remaining and things come into it. I understand that we do have to spend money on buildings when they go void, but is there anything else that is changing that valuation and, you know, reducing asset value?
So the valuation of properties is dependent on lots of different factors. So there are the property's individual credentials, you know, how good quality is the building, you know, where is it situated, those kind of individual aspects. It's also affected by what's happening in the marketplace and what yields are like. But one of the key things that affects the value of a property is how long the lease is, and how much secure income there is for that particular property. So we will refer to that as the valuation curve, and you will see properties move along the valuation curve depending on where it is in terms of the lease. So if you've just relet a property and you've secured a 10-year lease, that will be towards the top of its valuation curve. Whereas if you've got a property which is close to lease expiry, perhaps with a couple of years left to go, that'll be nearer to the bottom of its valuation curve. And so we will see that with our properties within our portfolio. So some of the values are very much affected by the market, and particularly those assets we've got that are multi-let with sort of different lease lengths are very affected really by what's happening in the market. Some of our larger properties, and particularly some of those office properties that we've got, are affected by how close they are to lease expiry. So we've mentioned today that we have got 3 office properties that are getting close to their lease expiry, and so they are towards the bottom end of that valuation curve. Chris, I don't know whether you want to add anything further to that.
No, I mean, not really. I think that that summarises, obviously, there are external factors which we can't affect, which is happening in the market, sort of levels of interest rates. Basically, it's what people can do with their money, the cost of money and everything. That affects the yield of the property or at which it's valued. That's something which we can't affect. Emily's absolutely right that valuation curve is very important to bear in mind, that where things are in the cycle. And that will have effect, the individual assets, that will have effect obviously on the value of the whole portfolio.
So the traditional word valuation isn't really what we're doing here. It's not a product that's depreciating on when it's how long we think its lifetime's going to be. It's so many other factors, and a lot of them we might not realise the loss of that valuation, because it could easily not happen. We're just you know, preparing for the worst possible scenario on those.
Yes, I mean, the valuation is done at a point in time. We're not looking for the majority of the assets. We're certainly not considering selling it at the moment. As I say, this is the important thing about this portfolio, is that it's an income portfolio producing income for our shareholders, and therefore I think it's a sensible, and we're probably required to do an annual valuation to see what the figures are. And as I said earlier, there are an awful lot of elements and reasons behind the valuation which we can't control at all. Those, I hope we've shown today that those elements which we can control, we're working on very hard to do so, whether that's, you know, that's sustainability, length of lease, level of rent, all those sorts of things. We are working away very hard to do it.
Thank you. And my other question might make me a bit unpopular, but when we're spending money on things like green walls and some of those things that we're doing within the portfolio, I don't believe they directly affect EPC of properties. We've got, in recent times, it's been quite a tighter finance situation with the portfolio. Why are we doing things that don't directly improve our EPC when that's obviously the biggest fire that's burning in the portfolio?
So the board is very careful about the expenditure of capital across the portfolio, and we always look at whether it helps to improve rental or capital value. And that might be because it reduces the void period and speeds up the reletting, or it might be because it improves the rental value, or we'll see the capital value improve. And in some cases, we may see all three of those things occur. It is very rare that any money is spent on the Sifco portfolio that doesn't deliver a commercial return, because even with our EPC improvements, they are impacting rental and capital values, even if only at a sort of a lower level in some of the smaller properties, through to a more extensive impact if there are larger properties that we're dealing with. So absolutely no expenditure is incurred without there being a return.
And some of these things, of course, are done by tenants as well. So and we work with the tenants, encouraging them to do those sorts of works, but we may not be doing them. Occasionally we may co-invest, but it's worth bearing in mind that quite a lot of the work is being done by the occupiers of the properties.
Okay, thank you very much. So we'll go to Councillor Pearson.
Thank you. I've had a couple more questions, actually, and another one has just arisen. We're being asked to comment on the robustness of the business plan. There was mention of KPIs earlier, but I couldn't see anything in this business plan that specified that the KPIs would either continue the same or what they would be for the coming year. Have I missed it somewhere?
I'll have to check through the long papers, but the intention is that the KPIs will be broadly the same this year. So the EPC one, that's a longer term time scale. The KPI in relation to rent collection, again, that's a kind of solid one. The equivalent yield, we benchmark, so it depends on what the MSCI all property equivalent yield is. So that will shift according to what the yield benchmark is. And with income, I think we're seeking a 1% increase in rental income. But I'll have to check through to see which page in the business plan that refers to. But
sorry, I can't hear you.
Sorry, I'll have to check through the business plan to be able to refer you to which page. But I'll double check that and make sure it's clear for the council report. So thank you for raising that.
My second question was about the loans and the valuation of the properties. I looked at accounts when we were looking at Sifco last year, and I believe that the loans are secured by the properties. But is it not the case that the value of the loans is higher than the value of the properties at the moment? What effect does that have? What needs to be done about it?
Yes, so the loans from the council are secured against the properties. So that's the security. So there are effectively mortgages in place. And we have seen the reduction in value of the portfolio in recent times. We've also had the costs of acquiring the portfolio as well, so stamp duty, fees, etc. As well. So in effect, there is a gap between the value of the properties and the value of the loans at the current point. Sifco has paid off some capital as well, which also helps. But the main thing really is that the fund continues to deliver income. So as long as the fund continues to deliver income, then the council won't need to enact the charges that they've got on those properties. So this is an income fund. We hope to see capital values rise over time, but in any event, Sifco is making capital repayments of those loans, and the risk is offset by the income that the councils receive.
Okay.
Councillor Wyman. having a bit of trouble with your microphone. I'll just say, while we're waiting, my plan is to do any more questions after this, and then everyone can go and have a 5-minute break before we go into debate. If you've got any further questions, please get them in now, and then we'll go for a break after Councillor Wyman's spoken. Thank you.
Thank you, Chairman. First, just to say, I thought it was a really good presentation. Just enough detail and lots of pictures, and make it reasonably understood by council members. I'd like to sort of pick up on the theme that Councillor Patchett sort of came into, which was sort of debt generally, but also the cost of debt. I mean, I remember sitting in this meeting last year, and we talked about our short-term interest rates being significantly less than they are at the moment. What do you, and also the impact that's had, although when we're benchmarking against other portfolios, we're benchmarking ourselves, but not really looking at the underlying sort of net return, which is net return less cost of debt. If you look at Babergh, for example, this year, I mean, the net return for Babergh was £35,000. Well, the risk associated with what our activity is creating and the amount of potential political unease and the impact that has on NPC rates, I mean, are you really that confident that we can get through the next 12 months without getting into a negative income return situation? That's the first question.
So the net return to Babergh in 2023-24 was £641,000. So it's still a considerable chunk of income. That's the gap between the income that Suffolk pays to the council and Babergh's cost of debt. So that's still a very large contribution towards the council's income. In terms of, sorry, I've lost my thread. Could you just repeat your question again? Sorry. Oh, it was around interest rates, sorry. In terms of interest rates, so Arlene Close are the council's treasury advisors, and their prediction is that interest rates will be going down probably towards the end of next year. That we'll see rates back towards maybe 3% rather than the kind of rates that we've had. So if we compare what Arlene Close said this year, at a similar time this year to last year they were still saying that there could be some further increases. This year Arlene Close are talking more about interest rates coming down. So that will have an impact on the council's cost of debt. I don't know whether Councillor Ward wants to say any more as the finance portfolio holder.
Yes, thank you. Not really much more from what Emily's just said, but certainly we are in a situation where we fully expect interest rates to have peaked, so therefore the numbers we've got here will almost certainly improve over the next financial year. As you see from a Babergh perspective, although the net interest is £641,000, the total revenue £810,000 once you take into account other income and the accrued interest. And that is a significant contribution to our budget, one we can't do without. Mid-Suffolk numbers are slightly different, but nonetheless, they're still significant numbers and represent what we believe is a low point, and that the interest will start to pick up or the net interest will start to pick up as interest rates fall.
Thanks. The second element to that question really was, if we see a downturn in interest rates into next year and later, will we see a proportionate change in our short-term cost of borrowing?
The short-term borrowing costs are linked very much to current interest rates, so yes, that will be the case. And you'll see from the profile that's presented in the report the split between short-term borrowing and the long-term PWLB borrowing for both councils.
Thank you.
Thank you very much. If there's no further questions, I'd like to thank the board members, Chris Hayworth, Henry Cook, Mark Sargent, Neville Pritchard on Teams, and Patrick Dixon for coming here this morning. I think if we can hold on to Emily Atack and Holly Brett for this next bit, or whatever you think, the others can leave for the debate, and I'm sure you'd like to get on with your day. So I'll have a 5-minute break now. Thank you very much. The questions part of that item is finished, and we'll go on to debate. We're looking at mainly what information is there, whether that's enough to get a good idea, and also whether we can really endorse the management of the portfolio. We have heard some quite interesting questions in that part of it, which was information on loan renewal. It seems like we've got a lot of information on what the market's going to be like and everything, but I do wonder if we develop that, looking at what we think the rates would be when loans run out. But we heard that's a Section 151 officer issue, but that's something that we could request, and if it's possible or not is another thing. The other one was the redacted information, that whether there's a better way of showing that without giving away information. But we've had lots of questions about EPC and expiries and KPI. But if anyone wants to open up the debate, please. Councillor Pearson.
Thank you. I think my feeling is that we're being asked, the specific question was for us to look at whether or not this is a robust business plan for the coming year. With all the reductions, personally, I don't feel I can comment on that. There is not enough information there to be able to say one way or another. But I do strongly support the idea put forward by Councillor Baker that the information could be presented in a way that it doesn't have to be redacted, but it doesn't give away, it doesn't identify tenants or properties.
Okay, thank you very much. Councillor Wyman.
Thank you, Chair. I think we really can't. The judgment we make today on the information we've been given, I think, is the best we can actually do. Really, I think we have a well-managed portfolio. The staff do, I think, a great job in terms of informing us as best they possibly can. In terms of retrospective, if I had the choice of whether we would take this route 5 or however many years ago it was, I think it would be a far more debatable choice whether we go along that route. But we do still receive, despite the almost apex of debt at the present time in terms of the cost of debt, a balanced return on what we get. And, looking forward, you would hope that with the cost of debt reducing and the potential for our portfolio to grow from a capital perspective, then I'm broadly satisfied, I have to say. Although, having said that, having to look at and challenge some of the embedded KPIs and all those business decisions isn't that easy to do from a session like this morning.
Councillor Scarf.
I think one of the things I referred to and a number of other councillors was our journey on how we're going to achieve the EPC ratings of C and also B. We've had obviously some information from the officers this morning, but I think I would like to develop a greater scrutiny of how we're going to actually achieve that, because that is our most stretched KPI within the 4 KPIs that we have. And if there was any way of reporting a little bit more detail, Emily has referred to possible detail for council, I think that would perhaps head off at council having the same debate about EPC ratings, perhaps, as we've had this morning, because we have concentrated on that quite a lot, but I think quite rightly so.
Thank you, Chair. Just to echo what Councillor Scarf said, and it was the question I was going to ask. For the EPC ratings, it seems to me the critical horizon actually is 2028, when a minimum B rating is expected. And at the moment, only 21 of the 90 properties are B or above. That's an even bigger target than trying to get the remaining properties up to C. So that's what the board needs to be looking at, rather than scraping C by 2027. Thank you.
Thank you, Chair. So, yeah, having sort of read the papers over the weekend, I think I'm broadly happier than I think what I expected to be with sort of Sifco's performance. So that's, you know, that's good. It's glad that they are performing and we're getting the return. Again, I think like all the fellow members here, you know, I do have concerns over our sort of level of debt and our debt interest and how we don't seem to pay off as much capital as I would like off some of the debt. And if 26, 27, we're sort of projected to have maybe some extra voids, and will sort of Sifco's return to us, you know, go into a negative, hopefully not. I would definitely support Councillor Baker's sort of recommendation that we codify and nominise the properties in order for us to receive more information perhaps about those properties. And I was talking to Chris Howarth in the break that perhaps if maybe on the next presentation, if we could receive how the impact of the EPCs. So if we could look at what rent were we receiving prior to increasing the EPC, how has that then increased our percentage of what we receive? You know, so we now get more money because it's a C or a B. But also I'd like to see it in comparison, without giving the location away too much, but in comparison to other similar properties that we don't own in the area, and how do we compare against them because we're a better EPC. So I'd like to see some very zoomed in, localised benchmarking, so that we can actually see the positive impact of doing the EPCs or not. You know, do we spend 200,000 and actually it doesn't increase the rent? Well, I want to know that information as well, really. So, yeah, so perhaps some zoomed in information localised to the area. Thank you.
So even if that information was broken down, so it's a pound spent, this is the increase on the rent, like, so that you didn't know what the final amount spent on the EPC improvement, you just saw a return on that pound spent. Yeah, exactly. That could be anonymised quite easily like that, couldn't it? But what we'll do is we'll just go through this, and then if you need to comment on anything, we'll go right at the end. You could have a bit of time then to tell us what is possible and what isn't. Councillor Baker.
Thank you. Yeah, I just feel, obviously, I'm new to this, but I don't feel there is enough financial information as far as the business plan. There's lots of information, but not in relation to the finances that we would need to see, or anybody would need to see. And also in relation to risk management, there's some comments around risk management, but I feel there is more information that would normally be required for that business case. So they're my thoughts.
Do you or anyone, can we home in on what that information is? Because it will make the job a lot easier if Emily and Holly know exactly what we're looking for. Yeah.
Sorry, Tricia.
Yeah, please.
In relation to the risk management or the finances, particularly, which would you like me to both go over?
Yeah, both, please, and then yeah.
So in relation to the finances, I feel we need to see per property. I think we do need to see comparative data per property, so I'm quite happy to go through it in detail. I think we need to see a forecast, at least a 3-year forecast, or at least into the 4-year sort of term. I mean, there's a page in here, for example, that doesn't have headings, so there's lots of figures. It's on page 90, for example, so there is a bottom line, the whole page is redacted, but there's no column headings at all, so I have no idea what the figures are sort of relating to. And there are some other blanked out pages like that where we're missing axes and that sort of thing. So, yeah, consolidation per property, 3-year forecast, more detail, anonymised, like we've spoken about already, is certainly what I'd suggest. And in relation to interim accounts, definitely, I mean, you know, without having any accounts at all, it's difficult. And then in relation to the risk management, so there is one sort of risk management box, just trying to find the page on there. It'd be helpful as a guide for us to, I'm sure everybody knows this off the top of their head apart from me, but the risk box in relation to the numbers, so what is a 6, what is a 2 and what is a 3, just so that we can see where that is. And also more breakdown. It's a very generalised risk there, and I feel there should be some substantive information sort of around that, so we can really get to grips with it. So I just feel that could be filled out more, if that helps.
Thank you very much. Councillor McLaren.
Thank you, Chair. I sort of kept quiet up to now. I think first of all, I want to say to Emily and the team, a very comprehensive report. As usual, Emily, everything in there. What I think we have a problem with is, as a committee, I think the skill sets that is needed to look at, say, the financial questions, we don't have on the committee. And I think if we're going to be forensic about it, I mean, personally, I don't have that skill set. And I'm just thinking this is such a comprehensive paper, whether we ought to have, I don't know whether we need some training as a committee, because the questions that were asked were quite relevant, but when you look at the finance, which is really what this is about, there needs to be more in-depth questioning, and we don't have that knowledge base. Well, some have. I'm not suggesting it, but I'm speaking for myself.
I think there's some training coming there on finance, actually.
Yeah, so we can always arrange that. We have done some initial finance training, but we can get the provider back to do some enhanced training on looking particularly at the council's companies. That's something that we can certainly put on as part of this year's training for scrutiny.
Well, I think for this, because I mean, we get this paper every year, and there are certain questions people can ask, but you look at the finance, and unless you're very skilled, you need to understand what the questions you're asking, so it's relevant. If this committee is relevant,
yeah, of course. As I said, we're
equipped to do the questions.
We are putting together a training program, an annual program, which will, just roll through the year. And this is something that Alicia and I are looking at, and we will bring it back to committee very shortly, actually, for you to agree, and then we can put that into place.
Councillor Rowe.
Kind of carrying on that point, because of the role of full council, like when there's this and full budget and stuff, I think it might be worth the recommendation being that we look into training all councillors, and plus, as you can see, we've got several subs today, so it might be worth not just looking at who's sitting on this committee. And also, I know we've mentioned before having kind of a bit of a glossary as well, because they understand bits of it, but not as much as some other members do. And there's kind of bits like dilapidations and covenant risk, which don't mean huge amounts to me, because they, until they're explained with covenant risk, but with the dilapidations having a redacted bit where I can't see what it is, and just the word means, and without a glossary means I don't actually have the skills or the knowledge to know that. And I know we've mentioned kind of glossaries and having that information, so yeah, just reiterating that recommendation that we've put forward previously.
So if we anonymised the information, if that's possible, that would take care of that glossary issue that you're talking about, would it? Or
No,
no, it's more than that.
It's about the technical terms and the technical ways of phrasing it. So there's like where brackets and minuses and stuff can requires a certain amount of knowledge, which a glossary kind of might be able to bridge the gap for people who haven't been able to do the training, and so we can more easily know what we are reading.
Okay, thank you. So we've got a few bits in there that have been mentioned. I think it might be. I'll just go through what's been talked about just to refresh your memory, and then we can talk about what because not everything can be done this time around, but maybe going forward we can look at presenting it in a different way. The numbers for quantifying risk was brought up, which I think a bit more information there would be very, very helpful. I've put examples of ROI, return on investment for EPC, which I think would be really useful if that information's available. Comparative data, interim accounts, that I don't know if we have interim accounts that we can use. I'll let you answer that. Anonymising individual property rents, and better training and information within the paper for technical aspects.
Thank you. So first of all, I think we need to apologise because you should have received a redacted copy of the business plan, but also a full copy of the business plan. And I hadn't realised until quite recently that you'd only received the redacted version. The redacted version is the version to be published, so members of the public can see that, but that information isn't commercially sensitive to councillors, so councillors should be able to view that. So we will send that round after the meeting, because I hadn't appreciated you hadn't received a copy of that, so we will do that. We obviously can't put that data out into the public because that could prejudice the commercial discussions that we have. But it's absolutely fair for you to receive a copy of that, so can only apologise for that. Hopefully that will help, Councillor. I can't see from here, is it Baker or Barker? Baker. Hopefully that will help you, because you'll be able to see more of the detail in terms of what's available. In terms of the accounting information, we have been asked to bring this business plan forward in the democratic cycle. There are challenges with that, because actually we wrote this business plan probably in February and then updated some of the data as that came through. But that means that we don't have the final end-of-year accounts. So I haven't yet seen the management accounts for the end of the financial year. I hope to receive them at some point this month. So we've based our financial data on forecasted management accounts from probably January time. So there is a challenge in terms of when the data is available and what we can share at particular points in time. And obviously we have to get these papers ready quite far in advance, even compared to today. So we're always dealing a little bit on a time lag. But we'll try to do what we can in terms of sharing information that's available. And we may be able to put more of those management accounts in the report for full council, albeit they will be redacted rather than publicly available. In terms of the EPC and pounds spent versus return, that is actually going to be quite difficult. Not largely because when we're undertaking refurbishment works, some of those works will be EPC works, but some of them will just be that the windows need painting, or the floor needs repainting. So we don't actually separate with our contractors what is an EPC cost and what is just general refurbishment costs. So I think that will be quite, that would be an additional layer of work that we would need to do in terms of splitting that out. We could probably look at it more in a more general terms. So I think it'd be difficult to say we've spent £1 and therefore you've got 10p back in terms of a return, or £1.10 back. But we could maybe look at it in more general terms, because otherwise we're going to spend quite a lot of time having to go through our contractors' bills saying, well, is that work, is that item related to an EPC improvement? Is it an EPC improvement, or is it refurbishment, or is it both? So I think we'll end up with quite an element of, be down to interpretation.
I don't know why I'm putting my hand up in my own meeting. But, so would that be a much easier piece of work if that was how much we're spending on properties and the rent uplift? Because for me, it doesn't necessarily have to be EPC. It could just be spending of the portfolio and whether that's been spent in the right place to improve the rental income.
And we have done that in case studies in previous years. So this year there hasn't been a huge amount of expenditure on the portfolio, but in the previous year we did have some case studies where we'd had more capital expenditure, and we showed what impact that had on both the value of the property and also the rental value. So we can certainly look at doing it in a case study way, which I think would probably give you better data than looking at it as a portfolio as a whole, because you have that data as a portfolio of a whole, and some of those rent increases are because of the market, they're not necessarily because of what we've spent. So that might be a better way of looking at it on a kind of property by property where we've seen a level of expenditure. But we'll also see where tenants are spending money. They don't tell us that they've spent that money. So that's quite difficult for us to record. We don't know whether they've spent £10, £20,000. They'll have just done the works to the property, like replacing light bulbs that they see fit, really, which will be beyond our knowledge and control.
I think quite a few of these problems are solved with the full documents, like to have the pink pages rather than the redacted ones, because Councillor Pearson, I think, when you said that you didn't feel like you had enough information, I think you probably would feel if you had the redacted information. We'd also have a lot more information about the improvements and where we are with EPC. General improvements within that. Would we see rent uplifts in the redacted?
You'll see a bit more detail around the valuations, because you'll be able to see the valuation figures for each of the properties, and you can see a bit of the sort of journey on that as well. I'm just having a quick look through where the redacted elements are. So yeah, I think the valuation is one of the key elements. There's a bit more information around capital expenditure as well, and a little bit of information around voids that are coming up as well. So those are the kind of key areas where you've got reductions. I may have missed some because I'm just looking at the sort of shortened version that I've got on my screen, but we will circulate that full version later today so that you can have a look at it. And obviously when it comes to full council, the councils will have the full version as well, so that information will be shared.
I think we'd better move on with the meeting, really. I think we've got choices here. We can say to Emily Atack, you've heard what we'd like. Can you do your best to carry out the wishes? We can have proper recommendations that we're asking for. They'll do much the same thing, because she can only do what she can do with the information that comes out. I think I feel a bit responsible for the redacted I looked and I saw the redacted information and I thought, oh, that's how it is. And I was a bit sort of like, I'm pretty sure previously we've had pink pages and it's not been there, but I think, to me, it's whether we can come to a conclusion that we can note this report at the moment, whether we need to attach something onto it. I think we probably do, to say that we haven't seen redacted information, and also how this committee feels on how well the management, the portfolio has been run, which to me, I think it is run to a very high level. I'm very pleased with the knowledge and that they've got everybody that they need on board. The depth of knowledge is just fantastic, and it's exactly what, you pay your money and you get that. For me, I think it's still managed extremely well, but I don't know if anybody wants to speak on that. Councillor Pratchett.
Yeah, I think we should formalise maybe a couple of recommendations, purely because we're not probably going to see these documents again for another year, and half of us here, I think, currently are subbed members. So if we don't put some kind of recommendations in, with the passage of time, we might actually forget what we sort of spoke about today. So I think we could possibly put a recommendation in about the anonymised, codified. I'm sure we could word that between us.
But if we can see the actual information...
Well, is that in... Okay, that's fine then, so I'll scratch that one.
A lot of it's to do with this not in the redacted. Councillor Baker?
I would like to see, perhaps, the case study that Emily was talking about. Perhaps if we could see a couple of case studies.
We do have, if we want to go down the formal recommendations route, we do have recommendations that I can read out, if that helps. Councillor Baker?
I obviously appreciate that I'm new to this group. In relation to a business plan for an organisation that is so large, where you've got the values that you're talking about, the business plan, I feel, should come forward in perhaps a slightly different format. So I feel there might be aspects missing from the business plan. There is no index at the beginning of the business plan. I do feel that there is more required. I know there is information, I know there is percentages, and I know that you can see there's bits of sort of thought processes, sinking funds, dilapidations, and I know we're missing sort of some of this information. But I think it would be good to go away and review this business plan and actually look at what is missing from here. Because personally, I don't feel comfortable that for an organisation as large as this, for the year ahead, that we're approving something which I feel has got things missing, regardless of the redacted data. So that's my sort of thoughts at this moment.
Anybody else wants to be involved in that, or whether we can just leave Councillor Baker. Councillor Pearson, would you like to? We could have a recommendation that you two have discussions over what you'd like it to look like. Can we go through the recommendations, please, Alicia?
Okay, so throughout the debate, I wrote down 7 recommendations. I appreciate that some of these might now no longer be relevant if councillors have sight of the unredacted information, but we can discuss this afterwards. So the 7 recommendations I have...
Sorry, can Councillor McLaren just please come in there? I think you've got something...
Can I just ask about that last comment that you made about Mid-Suffolk? Chair, this is a joint committee. Are we going to have some discussion with Babergh?
Well, if Babergh would like to be, it doesn't really matter because SIFCO is one entity. Those same discussions, they wouldn't do something for Mid-Suffolk that they wouldn't do for Babergh.
That you meet with Rachel, that the Mid-Suffolk members met with Rachel, but that's only 50% of this committee.
So would you like to put up Babergh?
Can we rethink that before we actually put it in a recommendation? Do you think we need some discussion around that? Jan, what do you think?
Chair, I think the best approach is for the actual full report to go out to members now, because you don't know what's in there yet. Have a look at it, and then if you do feel that there's something that you need some further explanation on, then if you contact Alyssa or myself, we will arrange for you to see your appropriate portfolio holder and Emily to chat through what those issues may be. Don't forget that the actual report is going to be approved at full council, So this is, you know, it's not too late. We've got full council to get it, you know, get it sorted out before it gets there. So I think that's the best approach, is for you to have actually a look at the full report, then see what's missing, because at the moment, without that full report, you don't know. But we have got some recommendations that we're going to put in to cover off most of that anyway, so that it's still, so councillors need not worry that we're still picking those up, and then we will put those recommendations through to officers. So do you want to let Alicia just read
yeah,
them
what
out?
we'll do to
Because they're
speed things up,
they're
because
pretty comprehensive.
we need to speed things up. Alicia will read out a recommendation. Put your hand up if you agree with that, and we'll quickly go through them, and anything that's not agreed with, we'll drop out, or if we need to talk about anything, we'll talk about it. Okay.
Thank you, Chair. So recommendation 1 is that the committee notes the Suffolk performance report and the business plan ahead of its consideration at full council. That the committee notes the Suffolk performance report and the business plan ahead of its consideration at full council. Essentially, that we're just noting the report.
So and so we've got more than enough to carry that.
Can we note there's the redacted version, because that's what we're voting on.
Forgotten or left out, we'll deal with it then. Yeah.
Recommendation 2, that officers explore means of providing more details about redacted information without disclosing identifying features.
So that's carried.
Recommendation 3, that more details are provided in the report to council on the proposed strategy to reach the EPC target, and requests that localised benchmarking is introduced to measure the effects of EPC ratings.
Carried.
Recommendation 4, that future reports provide financial information about each property, including comparative data and forecasting.
Carried.
Recommendation 5, that a risk management key is provided within future reports to the Overview and Scrutiny Committee and full council.
Carried.
Recommendation 6, that further training is provided for all members on SIFCO and the council's companies. And finally, recommendation 7, that a glossary of key terms is provided within future reports to Overview and Scrutiny.
Carried.
Thank you, Chair.
Oh, sorry, do we need a proposer and a seconder for all those recommendations? Sorry, we've finished that. Could I have a proposer for the recommendations? Councillor Patcher, and a seconder. Councillor Scarf had his hand up, so thank you. Got to make them official. So, okay, so the next item on here is JOS 2348, and it's the council's housing stock. Is the council's housing stock inspection ready? We have David White, who's very patiently been waiting there. Sorry, we did run over a little bit on that one. Would you like to? Are you going to introduce the paper? Yeah. Or you could. We have got a new member of the council, so you could introduce yourself as well, please. Thank you.
Would it be better if David was sat over there, because he's on his? Do you want it be easier to speak to us?
Would you like to come here?
I think that's a lot easier than.
Come on down.
Good afternoon. It's just gone 12 midday, so yeah, good afternoon now. My name's David White. I'm Housing Transformation Manager working in the Council Housing Department. So part of my role is to help us to prepare for the new social housing regulations that have come into force since April 2023. And as part of those new regulations, the councils, as a landlord of more than 1,000 properties, are going to be subject to regulatory proactive inspection regime. So beforehand, the regulator would only inspect local authorities where there was a concern raised, whereas now all local authorities will be inspected within a 4-year period, and then again. As we are two separate landlords, technically, we're hoping that the regulator will inspect us as one landlord, so we only have one inspection every 4 years rather than one every 2 years. So the paper that has been submitted to yourselves was around, was on the back of your question about whether or not Babergh and Mid-Suffolk District Councils are inspection ready, and what that kind of looks like. I would say that there's a lot of work to do to ensure that we are ready for an inspection. If one was to happen, we would get 6 weeks notice. What we're currently doing within housing is conducting a gap analysis against the standards. The standards are very prescriptive in terms of the specific requirements that we're expected to meet, and there is a code of practice which was shared with you as well as part of this submission. So what we're doing in housing is we are going through each of the standards and the specific requirements to understand or to gather what we feel is evidence that we're meeting those areas. With the areas where we're slightly not as confident that we're not meeting, or that we need to do some more work, we're obviously then initiating an action plan on the back of that. And our sort of next level of assurance, once we've kind of done those pieces of work and we're kind of confident, which we're hoping to be by the end of the calendar year, we're then going to be instructing an external third party to come in and do a mock inspection on us, so that we can be even further assured that we know where our gaps are and what it is that what a proper inspection may look like, because this is new for local authorities.
There's just a bit about our role as a scrutiny committee. I think that it would be quite useful to talk about.
So the two biggest sections of the new social housing regulations is safe and quality homes for our tenants to live in, but also that our tenants are meaningfully engaged within the running of their landlord services. That's basically how, if you look at all of the regulations, they're the two key focuses and themes for the regulator. So as part of that, we've had to, and local authorities are slightly different to those that are in a housing association, because a housing association will have a board of directors, and quite commonly they will have tenants who sit on their board. Whereas in the local authority, obviously we have elected representatives, such as yourselves, to represent the interests of tenants. And the regulator's quite clear that we need to make sure that whatever we're doing works for us as a local authority. They understand local authorities are slightly different, and that we work slightly differently. So what we did is we went and spoke to various different local authorities across the country who have been highlighted by TPAS, which is a tenant engagement leader in the sector. They provide accreditations to landlords, so to all social housing landlords, so local authorities and housing associations. So we spoke to other local authorities who have already got this accreditation, which basically is a big tick to the regulator that they know what they're doing. And we took kind of what we could from them, those conversations, and tried to make it fit with how our governance structure works here. Ultimately, the goal is to ensure that our tenants are meaningfully engaged in our decision-making process, and that they can scrutinise services that that they receive. So when we make a change to any sort of service or policy, tenants should be part of that decision-making and should be able to influence that decision-making. We have a tenant board which is made up of tenants, and now it's also going to include our portfolio holders for housing and portfolio holders for housing and property. which we hope will strengthen the board and allow freer movement of information between our tenants and the Cabinet. And we wanted to also include overview and scrutiny as part of that journey to ensure that, again, you can support our tenants in their scrutiny activities, because they are going to be scrutinising their own kind of tenant services that directly impact tenants, whilst obviously yourselves scrutinise services across the council. So it's to help you focus in a little bit more on tenant-specific scrutiny.
Thank you very much. Do we have any questions? Councillor McLaren.
Thank you, David. Very impressive, the amount of stuff we've got to understand, isn't there, around standards and competencies. Of course, with regulation, we get fitness of people, and I'm interested in the fitness of people. Given the expectation that the tenant board are going to scrutinise, could you explain to us as a committee how you're going to train them and what experience you're going to give to them so that they're able to feel confident in scrutinising the function of housing? Thank you.
Yes, so the tenant board have recently received scrutiny training from TPAS. So TPAS put on a variety of tenant engagement training, and we have asked them to deliver that to our tenants on the tenant board. We're also able to deliver that ourselves to any new tenant members that come along as well. We have invited the tenants to come and observe a meeting, an overview and scrutiny committee meeting as well, so that will hopefully help them feel a little bit more confident. And of course, we've invited yourselves along as well. If you want to come, that's absolutely fine. In terms of training, the other stuff that we're doing, because it isn't just about scrutiny, but the other things that we're doing is we are coming up with a tenant or council housing kind of induction programme for any new involved residents, any councillors that are interested, but also for our own tenants as well, to ensure that they have the knowledge, skills and experience to be able to hold us to account. Yeah, there's a lot going on in terms of training and building confidence. We're also doing a little practice scrutiny project with the tenants around the tenant handbook. So that's going to be their first proper scrutiny activity, which is going to start this in June. But that will form, although it's a practice go, it will still form part of the report that comes to yourselves in 6 months' time. Yes, and obviously we're going to be supporting our tenants through that with the skills that we've already got in-house, such as with our tenant engagement coordinators, myself, and we'll also be using, it won't just be the tenant board, it will also be tenants from outside who have experienced that service as well, so that we really get the correct tenant voice within that process.
Can I ask another question?
Yes, please do.
Thank you. So to go on to fitness again, when looking at some of the standards relating to housing officers, there's some requirement about housing officers being competent within the regulation and training. Could you explain to us how that's going to be managed within our housing department? Thank you.
Yes, so the competence and conduct standard, which is a separate standard from the information that I've already shared with you, but you're right, it does reference throughout around the competence and conduct of housing staff who provide any services to our tenants. The regulation is not final yet, it's still going through the motions for that particular element of it. We did respond to the consultation, but in broadest terms, there is a couple of requirements. So one of them is to ensure that we've got an up-to-date policy in relation to behaviours and values and how we manage performance of our staff as well. We're going to be working with HR to ensure we've got that in place. The second part is to make sure that any housing manager should have a level 4 qualification or equivalent, and any senior housing manager, so head of service or above, should hold a level 5 qualification or equivalent. We've been speaking to the Chartered Institute of Housing recently, who are, you know, the main provider for those qualifications. They've also responded to that consultation because the government currently expects everybody to be working towards that qualification or to have gained that qualification within the next 2 years, which we think is quite ambitious. Obviously, that's going to cost organisations money as well, and it's also going to mean that providers of that training are going to have reams and reams of people coming through their door. So the CIH is actually proposing that that's extended to over 3 years. What we're doing ourselves as an organisation is we've conducted a gap exercise on our current staff. So we know we've got about 20 officers who will require that formal qualification. We're also as I alluded to just in your previous question, we're also building a suite of kind of mandatory training for all of our staff. So I think we're showing that we're going one step beyond, not just the formal qualification for managers who need it, but also trying to build up that knowledge base of all of our staff who work in housing. So right from the tradesmen who are visiting our tenants, you know, to a housing officer who's on the phone, who might not necessarily be managing a service. We've spoken to the CIH about that, and they've actually started to talk to other providers and said what a great idea it is, and using us a bit of a case study. So that's really exciting, and something that I'm looking forward to developing further. Yeah, so that's basically it in a nutshell. But yes, the competence and conduct standard isn't finalised yet, so I can't give you exact details, and we're not going to rush in and do, you know, because it is going to be quite expensive. Each course costs about £2,500. So if that's times 20, we've got a kind of, you know, and also when you're taking people out of the business to do that training, because it's a year course, both courses are over a year, yeah, we've got to make sure we are managing, you know, to deliver business as usual activities as well. And I can say from experience the courses are quite comprehensive.
Thank you, David.
Thank you. Councillor Baker, please.
Hi. Just want to mention about the equality analysis that's sort of mentioned on page 100. It's sort of mentioning that it's not required for this report, and references to the standards. I would have sort of imagined that an equality impact screening would be required at the very least for sort of this kind of change, and particularly with tenants that can come with, you know, so many backgrounds and so many needs. So it's just an inquiry really as to what the thoughts are with that.
Yeah, so it wasn't required specifically for this report, but you're absolutely right. The work that we're doing within housing across the standards will require us to, and as I've mentioned in the report, to evidence that we're delivering fair and equitable services to our tenants. So, and basically what the regulator is going to be looking at is within our policies and our processes and our ways of working, how do you know that what you're doing is not disadvantaging some of your tenants? And that includes tenant engagement as well. So if we were, for example, to only hold tenant meetings online, you're disadvantaging potentially 25% of our tenants who have told us they're not online. And again, when you're publishing information, if you're only doing that online, for example, then again, we've got to kind of think about, okay, so if someone wanted to request a physical copy of that, how could they do that? You know, would we provide that, etc. So yes, whilst an EIA wasn't required for this specific report, it is something that we need to evidence anyway as part of the standards. So.
Thank you. In regard to the standard for allocations, am I right in thinking that we have to uphold the standard, and the Gateway to Home Choice is also responsible?
So Gateway to Home Choice is just one of the ways in which we can deliver an allocation service, and we have a common allocations policy because we're part of the Gateway to Home Choice family, or whatever you want to call it, the consortium. That policy does meet the standard, so it basically demonstrates how we fairly allocate our homes. So, and again, what the regulator is more concerned about there is if they were getting lots of complaints made to them about us unfairly housing people, that would be a bit of a red flag for them and something that they would want to come and investigate further. But I'm quite confident that that is actually one of the areas that we're able to evidence we're doing right.
Thanks. And if I can ask a slightly different tack. I'm right in thinking that am I right in thinking there's going to be a new interface with tenants for repairs and things like that? So when's that coming in?
So the new Total Mobile Connect job management system for our repair service. So we've just started to implement that. So the project is up and running now. We should have the first phase of that project, which is our responsive repair service, up and running by the end of July.
Lovely, thank you.
Thank you. Councillor Patchett.
Thank you, Chair. Are we finding that have we managed to sort of fully man our sort of tenancy boards across sort of Babergh and Mid Suffolk, or do we have sort of big vacancy gaps in the numbers on the boards?
So we are slightly underrepresented in Mid Suffolk. So if you're talking about an even split, we've got 6 people on, 4 are from Babergh and 2 are from Mid Suffolk. However, with tenant voluntary opportunities, that does change. I mean, just last week we got another person interested from Mid Suffolk, and then one from Mid Suffolk wasn't able to commit to it anymore due to work commitments. So what we've done as part of the terms of reference, you'll see in there that we will try to balance the membership between both areas, and where we aren't balanced, we will target, specifically the area that we're not, we're fully represented in. But as I say, the tenant board kind of acts on the good of all tenants. So our tenants aren't really too worried whether you live in Babergh or Mid Suffolk, as long as you're, then they're getting the same service.
Councillor Rowe, I'll just step in there if I may, because I've got a couple of questions on the terms of reference for the tenant board. The first one is the tenant influence budget. Could you give me an idea of what's going to be proposed there and what you're looking to do? The other thing is, do we need rules on when the board is quorate? And do we need a vice chairman in there? Or are these just details that are to go in? Or are they unnecessary?
I think I would say it's probably fair to say we're still working on the terms of reference to make sure that it meets. I think there is something in there about quorum of the meeting. The vice chair position, I think potentially we could look at once the board are kind of continue that upskilling journey that we're on at the moment. We do, as I say, we do have a tenant board chair, but as I say, we're there to try and support all the tenants to make sure that they, if any of them want that opportunity, that they can go for that at some point. The tenant influence budget. So as part of the tenant, as part of one of the standards, it's important again that tenants are kind of able to influence our budget that we're spending on tenant engagement. So whilst that might not be about, well, we want to hire a new, tenant engagement officer or whatever it might be, it's actually more around kind of their training budget. And so we do have a very small pot of money for training of our tenants, which, as I said, we've utilised through TPAS training. So what that exercise will look like, and what it's looked like in my previous experience, is we look at the current budget, we look at what we've spent this year when we come to redo the budget, so probably about September time. We'll look at the budgets that we've got currently, we'll look at what we've spent, was that enough, wasn't it enough, what are we planning on doing next year, and then looking at whether or not we can get more budgets, and then that will feed into the wider budget conversations that we have as the council. So again, it will be for the tenant board to make those recommendations about their budgets.
Thank you. Councillor Rowe.
Yeah, so a bit on the budget setting also, with the what implications will it be for how, because it talks about having engagement about rents and service charges, and kind of that adds in another step, and I'm just wondering how that then feeds into a conversation with council, because I can't remember it being part of how in the papers we had for the most recent budget off the top of my head, and also kind of with the, because it says about the accessibility of information basically, like down to potentially use, like having pictorial stuff and things. And I know there would be a whole range of reading ages that there is. Are you looking at kind of working with other bits of the council? Because I know there's various bits of the council looking at kind of how we present information, and this seems like it could be, if we don't already have those skills, and we're having to look at it, kind of have those conversations with other departments. So are you already having them?
So, well, in terms of, I might have to come back to you about, because I struggled to hear what it was you were saying. In terms of the information, we've actually already been out to tenants and we've asked them, what information do you want? How do you want to consume it? And kind of what's important to you, because we can tell them what we think is important to them, but actually, and there's certain legislative, I can't say that word, stuff that we have to publish to them, such as the tenant satisfaction measure results, for example. So we've already done that piece of exercise, and actually I think that's the most important thing, is we're asking tenants, and we're continuing to ask tenants, what information do you want and how do you want to see it? If I'm very focused on their council housing service that they're getting at the moment, and that's what we need to do as a minimum. I think the rest of the information that's out there is out there for everybody anyway, because it's all visible to through cabinet and through those types of mechanisms at full council and yourselves. So I would say that what we would be doing is we would be kind of reactively looking at anything that our customers, that our tenants are asking for. If it's something that we are not able to provide from a housing perspective, that we're then working with the other services. And then what were the other points of your question? Apologies.
All right, I'll take this. There was how does the extra step of conversations about rents and service charges come into it? And I do have a bit of a follow-up question with what you've just said, which was, are you helping upskill with being able to access information? So, for example, I use read aloud software, and I know from experience there'd be people who would benefit from being able to use read aloud software, but that involves a certain amount of IT literacy, which they wouldn't have, and so probably wouldn't be suggesting it. But there's a bit of a conversation about how skills that then they can access information.
So in terms of the rent and service charge consultation piece, we did actually consult with the tenant board about the proposed rent increases last year before we came to cabinet and got that decision made. So what happens usually is Deborah Fenton, as the Director of Housing, will come to the tenant board and explain to the tenant board why we're looking at the rent increase that we're looking at. Talks about the same as she probably does with members, to be honest. And I'm very clear to our tenant board that what the tenant board sees is no different to, in terms of housing performance, you see exactly the same set of data and figures, and you should get very similar messages, if not the same messages. So yes, we are already doing that in a kind of more informal way. What we probably need to do a little bit better is kind of consulting with the wider tenant base around kind of their rent and service charges. And I'm not, because obviously no tenant would vote for rent increases, that's the issue. So it's not about a consultation in the kind of, in that respect. It's more what we do is around our tenant annual report. So it's about being transparent about where our money's being spent, and that's one of the requirements within the standard. So you have to show, well, how much rent have you got in, how much of that got spent on repairs and maintenance, how much of that got spent on kitchens, bathrooms, aids and adaptations, how much, and they even want to know this year as well, how much of it gets spent on wages of directors and etc., which was obviously already visible for local authorities, but that's something that's quite new for the housing association sector. They're going to have to publish their their staff costs as well. So yes, so we are already involving them in that sense, so that they can again challenge, hold us to account, and say, it's not necessarily how much do you want us to put the rent up by, though. So yeah, and then what was the last part?
Yeah, there's a bit with kind of to do with training of when you're having conversations with people going they want information in certain ways, because digital literacy can be a barrier, but there are then, like I say, read aloud function is something which can be very beneficial, but requires a certain amount of literacy. So do we look at that side of training as well and have those discussions?
We do work with I think it's called ACE Angler, who do our digital skills training, and we actually do digital skills training specifically in our sheltered accommodation for our older tenants. We make an offer to all of our tenants that if they want to get involved, that we will provide them with the skills and knowledge to enable them to do that if they require. Another big theme throughout the standards is around how do you know your tenants? So as we were talking about earlier around equitable and fair services, if we don't know our tenant, if we don't know that if we assume all of our tenants can speak English, for example, then how can we provide fair and equitable services if we don't provide a translation service, or we don't provide? So there's more work to be done on that, I would say. What we are doing is we're implementing systems and processes at the moment throughout housing, because we've got some information about, well, this tenant is partially sighted or this tenant has got mobility issues, but what we don't then do is say, so what? So what do they need us to do differently in that respect? So someone who might be partially sighted might already have a read aloud, ability to, so we don't need to do nothing, anything specific with that. We can send them a letter still, and they can still read it and understand it. Whereas somebody else, might have a mobility issue, and they might just need a little bit longer to answer the door when we visit. So what we're doing at the moment is trying to capture that information, so that it's a lot more bespoke to the customer, so that when us as a housing team are delivering services, we can say, that's what we need to consider in that case. And over time, once we've built that information up, all of that should then feed into our policies and our equality impact assessments to make sure that we're not negatively impacting on anybody by the decisions that we're making. So that is work that we need to do more of, but we are doing it.
Thank you very much. Councillor Baker, please.
Hello. The tenant board, in my sort of experience, keeping the momentum of a board like this is one of the hardest things to do. And I noticed on here that they sort of serve for a period of 5 years, and then they can sort of reapply to join the board. I'm just thinking about sort of the backup procedures to this if people drop out, if they don't attend for so many meetings, because I think that's where you're likely to see that kind of board fall apart, because people have their lives, and it's difficult sort of on a voluntary basis. So I wondered what things, if that's already been considered, if you've already got procedures in place, but also around exclusion, because it mentions the membership, and then tenants or leaseholders who are in breach of their tenancy will not be eligible. Also wondered about other exclusions, certain if there's criminal investigations going on for individuals, or if there's anything like that, because we live in a complex world. So just wondered if that was tightened up a little bit, and around conflicts and things, if that's okay.
So yeah, it's quite a standard practice for engaged tenant panels to have the clause in there about breaches of tenancy. Now, what we would consider a breach of tenancy is that notice has been served against them for a breach of tenancy, rather than they're a week in arrears on their rent, for example. That is technically a breach of tenancy, but we wouldn't be looking at that as a reason. So we would apply that term in a fair and reasonable, proportionate way. But if they had a notice served against their tenancy for whatever reason, so whether that's for rent, antisocial behaviour, or anything else, then yes, that clause is in there to ultimately say that person is no longer able to be involved with us until that tenancy breach has been resolved, is what I would say. So yeah, okay, we'll take that comment that we potentially need to make that a little bit clearer. And what was the other part of your question, sorry?
It was around sort of the momentum, keeping people on,
Sorry.
in terms of 5 years and that sort of thing.
Yeah, so we haven't got any backup plan yet. There is a risk in my risk register that says, a failure to deliver tenant scrutiny function, which would be all of our tenant board up sticks and walk out because it's too much for them, or they've got better things to be doing. So what I think we would then have to look at is what we could do to incentivise that. So we do have a list of incentives already advertised on our tenant engagement pages. We pay for all out of pocket costs, for example, any travel expenses, childcare expenses, things like that. Some organisations have gone down the road of payment, so actually giving them a kind of a salary of some sort. But again, we'd have to make those decisions together, I think. So so that's what it would be, a kind of, right, we need to do something differently. So that's kind of the process we would go through.
Thank you. Councillor Scarf, please.
Yeah, thank you, Chair. I guess my first question is about sort of governance arrangements. It's a two-way flow between the tenant board and the scrutiny committee, and we can add a recommendation. I'm assuming by that we can't delete a recommendation, because I think that's an important principle that needs to go further than the scrutiny committee. Am I correct in that assumption?
I mean, I think you could recommend that a recommendation was deleted, but I think the tenant board would probably take umbrage with that. So, yeah, I wouldn't necessarily say it needs to be as prescriptive as that, but yeah, I think that would be a decision for you to make.
Okay, because I think it is an important to manage expectations as well, because there is an element of managing expectations. This is a new duty on us, and it's a new opportunity for our tenants to feed back through the scrutiny process. So what happens if the tenant scrutiny recommends something that we know that we can't actually achieve or be affordable or whatever? What happens then? How does the regulator look upon that? How do we deal with that? Does it go right the way through to Cabinet, and then Cabinet says, well, we can't achieve that for X or Y, and it's about managing expectations? What happens there? It's a bit about the semantics of how it works once it gets going. You might be worrying about something unduly, but I just wanted to know what your thoughts were on that.
So I think so all decisions would be taken by either Cabinet or an officer, so Deborah usually as delegated decision making. If we were not able to fulfil the recommendations of the tenant board, then we would need to tell them and explain that. And I think the regulator would look fine upon that, as long as we have, as long as we've made it clear as to the reasons why and back that up with evidence. I think that would be the same as any members who would want something and we're not able to give it to them. So I don't think that would be an issue. I wouldn't necessarily say that recommendations need to go to Cabinet to be then knocked back. I think we could have those conversations throughout the scrutiny process and almost kind of make people make the scrutineers aware of I don't want to say constraints, but the boundaries within which we're working, so that we don't end up with recommendations that are potentially just going to all be told no, we can't do that because we can't afford it, for example. So yes, you're absolutely right. I think managing recommendations of the scrutiny panel to a point where we're not, not dissuading them or silencing them, because we want to make sure that they've had a fair opportunity and not not constrained in any way.
Any further questions? So we could, if anyone would really like to have a break now, we could have a break, or we can power through and get this done. But I will stop it if somebody wants to have a break. Yeah, okay. Thank you. So I'll end questions, and then we'll go into debating the recommendations. I think we've had some quite interesting things that maybe little tweaks that might be necessary on there or not, depending on what the committee feels. I think one of the ones that stood out for me is this this idea of the person not being able to sit on the committee if they've they're in arrears, or technically they're I don't know the right. Yeah, exactly. Technically in breach of their tenancy, but not you know, it's not one of the more serious things. I think that's something that we could do with talking about. Yeah, the attendance, it does say at least 2 officers. Is that what you're saying? That's quorate as 2 officers there, so it can be run and might need to be run with just 2 officers. I think it'd be a lot better if there was a tenant on there for it to be quorate. The vice chair position, I think it's quite important for succession to have somebody, even if they're not sitting in the chair, to be a vice chair, just in case the chair leaves abruptly. So I'd quite like for the committee to discuss whether we would want a vice chair. I did make a list of some other bits and pieces, but I can't find them. Would anyone else like to talk on this? Councillor Rowe.
Yeah, I was going to say, there's also, I was going to put forward the recommendation that we share learning, especially as we'll be having conversations with people about what their specific access needs are, which is like a potentially very valuable bit of learning for the council, and it'd be good if that spread across the council rather than just being kept in one department.
So, yeah, does anyone want to? Councillor Baker.
Just going to say that clearly you've got really good understanding around sort of the equality aspects. I can see it's all there, and you know exactly what needs to be done and what you are doing. Just thinking about actually sort of getting it down, evidencing it somewhere, because you know, just to show the level of work and consideration that is going into it all. I think that would be great for other people to see. So that's what I'm saying.
Okay, so do we want to talk about this anymore, or do we want to just have you got any recommendations down, or do we?
Yes, Chair, I have 3.
Yeah, could we do the same thing where we put our hands up to support the recommendation, and we'll deal with them.
That's fine. Recommendation 1 is just that the committee notes the report and commits to supporting the new Tenant Scrutiny Board.
Carried.
Number 2 is that a quorum for holding a meeting is established within the terms of reference. And number 3 is that a vice chair position on the Tenant Scrutiny Board is created.
Right, okay, would anyone like to? Councillor Scarf.
I think the committee should acknowledge the amount of work that's been undertaken to get to this stage, but more importantly, we should welcome the opportunity that this provides for our tenants to liaise in a very meaningful way with us and us with them, because I think that's a really positive step. And expectation management put aside, I think it's really exciting for the council's tenants, and really welcome.
Thank you very much. I'll give Alicia a few moments to do that. Are you still? Councillor McLaren wants to come in. Are you ready for that? Yeah.
It was just a comment.
Oh, okay.
to
Yeah.
follow from Keith, actually. I think it's to be welcomed. I think it's, as you said, exciting. And as a committee, we're going to welcome the tenancy board. And as we said, David, previously outside this meeting, that we want to meet with them informally as well, so they can feel comfortable with our committee. But I think it's a very good forward step for housing. Thank you.
Thank you. Do you want to? We'll add that as a comment that Councillor Scarf said about what a good thing it is that this is happening. Do we need to vote on that, or can we? Yeah. Okay. If that's Councillor Rowe.
I was just going to propose it.
Perfect. I'll take Councillor Rowe as a proposer and a seconder. Councillor Scarf. I'd just like to say before we've done short votes on this, but we'll do a vote for everyone. I'd just like to say, David White, thank you so much for coming in. You've been absolutely, you know your subject inside out. You've everything's been thought about, and we're very lucky to have you dealing with this, I think, because this is quite a complicated, legislative thing to navigate, and also it's very complicated when you get tenants together on a board to make sure that's exactly right. But I've got a lot of faith that you're the best person to do that from your representation today. So do we want to, we haven't done any electronic voting, have we? Do we want to electronically vote, or shall we just show hands?
We can do show hands.
Yeah, okay. Can we show hands for that, please?
Thank you.
That's unanimous. Thank you. Right, so we'll go on to the forthcoming decision list, I think. Do members have any comments on the forthcoming decision list? So that's for noting. So we'll move on to the item 11, overview and scrutiny action tracker. Any comments from members? It's, yeah, there's a few things that are being dealt with on there. Councillor Wyman.
Yes, Chairman. It's not really getting any shorter, is it really? Have we sort of got to that stage where we're asking cabinets or cabinet members to come back to us with definitive responses and or challenge them again?
So now we're at the end of the year, I am very much chasing for those actions to be rounded off. I think they've been on there for long enough. When we go into the new municipal year in a couple of weeks, so at the next committee, I'll take off all the actions on there that have been completed, and we'll just keep a track of ongoing ones, and we'll sort of start afresh, so to speak. But yes, I am chasing cabinet members and leaders and the appropriate directors for responses to those, because I want them completed as much as you do, I imagine.
Perfect.
Thank you very much. No further comments. Then we'll go to the draft Babergh overview and scrutiny work plan 24 to 25. Interesting to note that we've got the West Suffolk Safety Partnership coming round again, which is, you know, a lot of the, some of you will have been the first scrutiny committee that you ever did at the Ipswich at Portman Road. So it's come around again, and it will be good to go into that with like councillors' experience of the last meeting. There is another session of, would you like to talk about the session that we've got coming up?
Of course. So I circulated an email to members on Friday, I think it was. So on Thursday this week, we will be having another work plan session where we're going to be putting together the work plan for 24-25. What's in your papers today is the statutory items that we consider every year. So that's sort of the skeleton of our work plan, so to speak. So at the session on Thursday, we'll be coming up with some new topics for us to review over the next year, and we'll scope them out as a group and put them in on the work plan according to when directors and cabinet members think it's appropriate. Thanks, Chair.
Thank you very much. Are there any comments on that Babergh work plan? No, so that's for noting. Now the Mid-Suffolk work plan, very similar. Are there any comments on that? No, that's for noting as well. So that concludes the meeting at 11 minutes to 1. Next scrutiny meeting is the 15th of July. Thank you very much for sticking with it. It's been a long meeting. There's been a lot discussed, but it's been really good quality and I'm really pleased with it. So thank you very much.